Welcome everyone to ABG Investor Days. My name is Henrik Hintze and I'm an equity research analyst here at ABG. With me now I have the CEO of Awardit, Erik Gråman. He will now present the company for us and after that I will ask some questions. Please Erik, go ahead.
Thank you. So, hi everyone, hope you're all well. Can tell from the people here at least you're suntanned, ready for summer, so good sign. So I'm here to talk about Awardit, and I'm the CEO of Awardit since March last year, when I took over after the founder, Niklas Lundqvist, who is still in the business, working with business development and M&A. And very briefly, Awardit was founded in 1999. It went public on the stock market in 2017, late 2017. And we are the leading provider and service provider of loyalty and gift card solutions in the Nordic region. And we also have an increased foothold now in the DACH region, so growing also outside of the Nordics. And we are managing and running on behalf of our clients more than 250 programs in the Nordics. And we also have a similar number of clients across the DACH region. Our headquarters are in Stockholm. We have offices in Gothenburg, in Copenhagen, in Hamburg, and in Wels in Austria. And today we employ around 250 people across these offices. And since our IPO in 2017, we have made 11 acquisitions, adding up to this portfolio of services and clients that we have today. And I will talk a bit more about that later on. And our two main business areas are loyalty solutions and gift card solutions. And up until 2017, Awardit grew organically. And after that, we have continued to grow organically, but also added acquisitions to the growth, of course. And our vision is to become the leader in Europe in our segment of business, which is loyalty solutions and gift card solutions. And we believe we are on a good way to achieve that. And our mission is to help customers improve their customer satisfaction, retention, and sales that goes across both loyalty solutions and gift card solutions. And we provide a proprietary software toolbox which enables our clients to service their clients with loyalty programs, solutions, and gift card solutions. And we see strong organic growth in the business, and we have a rising profitability as well. And if you look at our mix in the business, around 25% on the revenue side is from gift cards, and 75% of revenues come from loyalty solutions. And from a geographical perspective, we have around 70% of revenues coming in the Nordics and 30% and growing in the DACH region and outside of the Nordics. And as I mentioned, we have our two main business areas, which is loyalty solutions and gift card solutions. And within these two, we have a multiple number of services and platforms that we offer. On loyalty solutions, we primarily divide it into B2B loyalty programs or clubs. And here we have an end user that is a business owner. And we also have, on the other side, B2C clubs or loyalty solutions. And there we have end consumers that are using these programs. And there we have clients such as SAS, Scandic, and E.ON. On the B2B side, we have clients such as Ahlsell, Würth, and Bayer. We also run motivation programs and loyalty programs for employees. And we work with a lot of clients on these kind of programs as well, enabled by the same kind of platforms for loyalty solutions that we provide to B2B and B2C programs. On the gift card side, we also have a multiple range of different kind of products. We enable and distribute international brands such as McDonald's, Spotify, and Netflix in the Nordic market. We work with Nordic brands such as Ving, Synsam, and Stadium. We have experience products such as hotels.com, where you can buy gift cards to redeem for stays through hotels.com. We have private labels within that segment, such as Supergift and Hotel Box, which is our own labeled gift cards, where you can buy a gift card to redeem for an experience, a hotel stay, or similar. We also have a MasterCard program called Paygo in our portfolio, where we own the full program and distribute that through Nordics as well. We work with mobile top-ups and ticketing with clients such as Comvik, Free, and Filmstaden. And we also work with processing services, enabling clients to process their gift cards, particularly in the Nordic region, but also throughout, starting out in Dach as well. And the timeline to put this portfolio together, as I mentioned, we went to the stock market in December 2017, and we have since made 11 acquisitions. In the early days, Awardit was a drop ship-based solution for running loyalty solutions. We then acquired Crossroads, which was more of a B2C provider with its own warehouse, creating a hybrid distribution model where we today have both dropship solutions and our own warehouse-based shipment to our clients. We have made 2 major acquisitions in the gift cards area, which is Retain24, which is the main processor of gift cards in the Nordics, and MBXP based in Copenhagen, which is the main retail distributor of gift cards in the Nordics. And our 2 latest acquisitions have been in the Dach region with Prämie Direkt in December 21, and the latest one in Austria, Connex, in February this year. And they complement each other on loyalty solutions in the same way as Awardit in the early days was complemented by the acquisition of Crossroads. So while Prämie Direkt had its own warehouse-based distribution system, Connex had dropship-based solutions, and we are now combining these 2 to create a full-scale solution in the market. And looking back through the years, up until 2017, we had organic growth, then we added on acquisitions to accelerate growth. You can see that we have added EBITDA per share along the way, pretty much every year, except for 2020, when we had a bit of a setback due to the pandemic. Some specific products, such as cinema tickets, took a hit in terms of volumes, and that affected our profitability as well. You can also see that our EBITDA margins levels and our gross margins have gone down as an effect of a dilution from the acquisitions that we have made. So Awardit came from a certain level of profitability and EBITDA margins, then adding on other businesses with other profiles has made the margin come down and being diluted. But what to do is that we work with all our businesses to strengthen margins over time, of course. And 2022 was the best year ever of Awardit. We delivered 862 million SEK in revenues and 111 million SEK in EBITDA. And if you look at the underlying business without the newest acquisitions, such as Inspiration Company, MBXP, and Prämie Direkt, that's really the driver of the growth in 2022. So the core business, which was the old business before the latest 3 acquisitions, had an organic growth of 23%. You can see that here in the yellow line to the right, or the yellow part to the right is the growth of the old business. And then we add the acquisitions on top, which is the blue part. And the acquisitions have been growing slower than the old sort of core business. And that's mainly due to Inspiration Company being an acquisition where we merged the organizations and merged the customers onto the Awardit database. And new customers are not coming into primarily Inspiration Company, but now onto the Awardit platform. So we see a lower growth on what was before TIC. inspiration company. MBXP was a turnaround case, which we turned profitable over 2 years. And Premier Direct has seen some challenging market conditions in Germany that has taken growth back a little bit. But and you can see that also through Q1 this year. But we believe we have a potential to continue to grow there, especially with the combination now of Connex. And if you look at Connex coming into the mix here as our latest acquisition in February this year, they add to the revenues of the group. If you look at the pro forma for last year, as if they were part of the group, they would have added 192 million SEK in revenues and 18.5 million in EBITDA. So including Connex, our pro forma revenues is 1,078 million SEK, so 1,078 million SEK for last year, and our EBITDA around 130 million SEK. And the acquisition of Connex was based on revenues estimated at around 15.6 million euro when we made the acquisition. After closing the books, they actually delivered more than that, so 17.8 million SEK. The estimated EBIT was 1.4 million SEK, and they delivered 1.7 million euro, which makes it an even better acquisition actually than we hoped for, and adding, of course, strength to the group. And adding now Connex to the group, we will see gross margins being strengthened on the total level of the group due to the fact that Connex has very high gross margins, especially in their gift cards and voucher business. On the other hand, we will also see personnel costs coming up because they have a higher share of revenues as personnel costs compared to the rest of the group. And that's mainly because they are building their own voucher programs. They are working with fulfillment and sales of these programs, which is costly and rather employee heavy compared to the business that we run in the Nordics. But also worth mentioning is that we had around 137 million SEK of cash and cash-like items being brought into Awardit from the acquisition of Connex as well. So also strengthening the cash position of Awardit through the acquisition. And looking at the first quarter of this year, it was our best first quarter ever. We had a 33% growth compared to last year's first quarter, which then was 222 million SEK. And from that, 29 million came from Connex, which is then for February and March only. And that's 33% growth, but organically, excluding Connex, it is still 15% growth on the rest of the business. Now we consider everything except Connex organic, because all the companies have been with us for more than a year, so they become organic to us after 1 year. But so all in all, the rest of the business, a growth of 15% organic for Q1. And some main drivers are a growth in Supergift, our own private label gift card. We had a growth of around 100% in face value sales compared to last year's Q1. We also had a strong growth in our B2B loyalty programs, driven by one of the clients that we merged onto the Awardit platform last year in Q1, coming in with lower comparables for last year than this year. And this will even out a bit now as we move into the year. And on an EBITDA level, if we adjust for our acquisition costs that we had for Connex, which was 4.4 million SEK, we had an EBITDA of 11.5 million SEK, which is 102% more than last year. And then the reported EBITDA, so also taking into consideration these acquisition costs, were 7.1 million SEK compared to 5.7 last year's Q1, so up 25%. And here you also had a contribution from Connex coming into the mix. Could also be worthwhile to mention that We are rather heavily affected by seasonality in the business, which means Q1 will always be our weakest quarter, both in revenues and primarily in profitability. And that's because the trading pattern in loyalty programs is much stronger end of the year, especially around the weekends, the Christmas holidays, etc. And especially also in gift cards, where you have high sales in parts of the programs end of the year, and then high redemptions affecting both revenues and profitability in Q1. So lower profitability in Q1, then usually we have a normalized Q2 and Q3, and the strongest quarter is always Q4. And in the quarter, we had a bit of an effect, of course, then from the seasonality patterns, but especially from MBXP, which has high redemptions of gift cards in Q1. And they had higher redemptions this year than last year, so thus affecting the profitability of the quarter. And we also report breakage, which is unredeemed values of our own private label cards. And in Q1, we had 1 million, roughly, in breakage from Supergift. And we have started to report a little bit more around loyalty as one business area and gift cards as the other, and we'll continue to do so. And we had growth in both business areas. In Q1, in loyalty, we had 25% growth, and the organic growth in loyalty was 17%, and the rest coming then from Connex. In gift cards, we had 63% growth, and that's because Connex is coming in strong here. We had an organic growth of 9%, and the rest of the growth is coming from Connex. And in both of these areas, we see strong development of the existing clients that we have on our platforms. And we also see a continued strong interest from new clients to join the platforms. And on both these, both these business areas, we have very strong synergies of scale through adding new clients to our platforms. We can pretty much of course, run the Q4 business the full year around. That's the capacity we have, and beyond that as well, of course, on our existing organization and the existing platforms and systems. So we can add easily clients and add profitabilities through synergies of scale. And this we also see through our gross margin that we can strengthen over time. In here, you see the Q1 is our weakest quarter, and that will, I mean, that has been strengthened through the acquisition of MBXP, and now MBXP becoming organic. Now we had a bit of a stronger gross margin in Q1, which was 32% compared to 28% last year. But that's also because of Connex coming into the mix with a very high gross margin. And they have a gross margin of around 70% in their gift card programs. And as I mentioned, at MBXP, on the other hand, we had lower gross margins due to higher redemptions, actually taking down a little bit the organic gross margin. And on the P&L side, I mean, we deliver not a very high operating result in Q1, as you can expect. We have a higher cost of commodities in our programs, driven primarily by higher turnover. Other external expenses are mostly affected by the addition of Connex, while comparable other external expenses actually go down in the quarter. And then we have personnel costs coming up through adding Connex to the mix. But we believe we have a strong foundation in terms of the margins in the programs that we run and the development that will enable, strong contributions in the coming quarters. And to summarize, I believe we are well positioned to continue our success. We continue to grow organically, which is the core, of course, for us to be able to deliver growth with our existing clients and add new clients to the platforms. We had 15% organic growth in Q1, and we see that continues into Q2 as well. Also, the acquisition of Connex provides a very strong position in DACH. We have a leading position now in terms of being able to provide clients with full-scale loyalty solutions in the DACH region. And it's a perfect fit with Prämie Direkt that we already had acquired, and also a potential now to grow, not only organically through these two, but also to add complementary acquisitions in the region as well. But we see a lot of potential to start cross-selling products and services between Connex and Prämie Direkt, working closely together, also in approaching the market with a combined portfolio of services moving forward. So very strong prospect for continued organic growth in DACH region. Also, we are working a lot with projects across the group to realize savings in procurement. Of course, having a larger footprint in DACH gives us the possibility to have better negotiations with suppliers, etc., in all different areas. We have cross-selling opportunities not only in DACH, but also across regions. And we're also working with different kind of tech projects where we can enable synergies across platforms. We have a potential to launch Supergift across markets, and we're launching Supergift in the German-speaking part of Europe now in Q2 through the Connex sales channels, in a similar way that we launched Supergift in the Nordics, creating a 100 million SEK product mainly through our own channels. We also see a continued flow of new customers and strong pipeline of new prospective customers. We have identified additional potential complementary acquisitions. Our focus is on the DACH region, but we also see potential in the Nordics and in the broader scope also across Europe. We have not only proposed but also agreed to reintroduce dividends payments. That was put on hold in spring 2020, but now it's back again. And our vision is to become the leader in Europe, and we believe we are on the way there, really. All right, I think that was it.
Thank you for that.
Thank you.
Let's move on to some questions. So, speaking of your two segments, the gift card and loyalty segments, could you talk a bit more about how you view the potential of these two segments going forward? And also, maybe, do you have customers which purchase both of these services, or is it largely different customers?
It's largely different customers. We have, of course, talking about the development of the loyalty business area, of course, I could do that for some time. Also about the gift card business area. And I believe both have great potential to grow further. We see on the loyalty side, we see continued growth from existing customers that we had for a very long time. We continue to grow with those, even in more challenging times. Loyalty becomes even more important for our clients. They are very keen, of course, to keep their loyal customers within their business. So investments into loyalty and loyalty programs has not decreased, and the interest in loyalty programs has not decreased. We also see that we have a strong footprint in the Nordics, but we can add further customers in the Nordics as well. So I believe we have a good future in the Nordics for loyalty programs. And in DACH, as I mentioned, we have a combination now that really enables future growth and enables selling a full-scale solution to the market that we have not been able to do before in the DACH region. So strong, I think, a strong prospect for growing the loyalty segment. In gift cards, it's not growing in the same explosive way. We are covering a lot of the Nordic market, but we are adding, clients every quarter, every year to the platform. Every client that we can add is a profitable one, of course, adding scale to our network and the usability of our platform. We also see the potential to work with products such as Supergift and adding variants to that, expanding the portfolio of what we offer to the market. And that, I believe, is, a strong prospect as well. We have some products now in the DACH region that we don't have in the Nordics, and the other way around, which can be, a strong future growth driver as well. And then there is a combination, of course, where we can offer distribution through our programs to gift card clients, which is a very strong proposition. We launched our Super Gift gift card mainly through our own channels in loyalty programs, making it a successful product for us, really. And that's also how we launch other part of, our gift card portfolio. We enable their business through their own, business, retail, online and offline, but also through other retailers, through MBXP across the Nordics, and also through our own channels. So, of course, it's a very strong combination as such.
All right. Thank you very much for that, Erik.
Bit of a lengthy answer.
Yes, and I think that's all we have time for, actually. But thank you very much for presenting the company, and thank you all for listening.
Okay. Thank you very much. Thanks.
Welcome back, everyone, to ABG Investor Days. My name is Henrik Hintze, and I'm an equity research analyst here at ABG. With me now, I have John Westberg, CEO of Clavister. John will present the company for us, and after that, I'll ask some questions. Please, John, go ahead.
Thank you very much. Thank you. Yes, as mentioned, I'm John Westberg. I'm one of the co-founders of Clavister, also the CEO since 2017. We'll speak a day about what we refer to as Swedish cybersecurity in an unsecure world. First, some quick backgrounds about Clavister, for those of you who don't know us. We were founded back in 1997 as one of the earliest cybersecurity vendors in Sweden, actually one of the earliest one in Europe. At that time, back in 1997, there was only one main incumbent vendor, being Checkpoint Technologies out of Israel and US. Today, the company has grown its portfolio, so ranging from our original offering being firewalls for civilian or enterprise usage. We've now broadened that to include firewalls for a wide range of applications, civilian use, defense usage, telecom usage. We have an area of identity and access management solutions, which is highly relevant in these days of remote working. And our latest offering includes cloud security that we've been working on for a while now. We are listed on Nasdaq First North since 2014. And we emphasize the fact that our products are entirely developed in Sweden. This is highly relevant when it comes to cybersecurity and the trust of technology origin, given the fact that most of today's cyber technology originates from either US, China, to some degree Israel, and to a smaller degree nowadays, Russia. We are focusing on what we refer to as mission-critical applications, namely customer or customer groups where the financial loss could be massive, the reputation loss could be massive, and where the importance of this technology origin is highly relevant. And I'll come back to that in a while. This is something you know, of course. I mean, we have a geopolitical situation that is quite dramatic. We have a Europe that's been seeing a completely different, reality, a new world. And especially in the cyber area, it's very, very tangible as well. We're seeing not only cyber attacks originating from Russia towards Ukraine or Russia towards other parts of Europe or other parts of the society, but also an escalation of cyber attacks in general. The type of attacks we see are also a bit, changing from what we've been used to in the past. So this is just a snapshot from early May, so not more than 1 month old. We see attacks towards the French Parliament, against the Dutch Senate, against the Dutch justice systems, against even here in Sweden, the Swedish tax agency were attacked some weeks back. Municipalities in Italy, healthcare, Swedish Parliament was attacked, the Swedish press agency, and so forth. So, this is the tip of the iceberg, obviously. But what you can see is that we're not looking at the average optician or car workshop here. We're looking at parts of the society which is really critical, mission critical. The type of threat actors are also different compared to the past. We're not obviously originating all the attacks from Russia only, but it serves as a good example, obviously, given what's happening in the world. So this is just a snapshot, an example of a few threat actor groups and their relationship typically to the Russian special services. Some directly associated, some being sponsored with some kind of a so-called firewall in between. But clearly, most of today's threat actors have associations with state or state actors in one way or the other. And that's a big difference because, as you can imagine, the resources, the political views, and the sustainability and the time that these threat actors have to their possession is quite different compared to the individual hacker or the individual financial crime group. So this is something different. is one very practical example. Part of the Russian military intelligence, GRU. This group is known to be behind the big attacks in Ukraine towards the energy sector, towards Maersk, towards other large attacks. Obviously, well hidden, probably never going to get placed behind bars, but a good example, or bad example if you like, of a very motivated, very well-sponsored group. The challenge that we see, and many of the companies in our industry see, is what we call a misalignment between digitalization and cyber maturity. Regardless of what statistics or what reports you look at, you see sort of the same trends. Sweden being in the absolute top in digitalization in Europe. Could differ between one or two or three places, but typically Sweden is in top. That's good, obviously. I mean, that's really flattering. What's not so flattering is how Sweden ranks in cybersecurity maturity. And again, regardless of the report you look at, Sweden ranks among the lowest. The delta or the discrepancy that this creates is really opening up for a huge vulnerability for society. So high level of digitalization, which is good, but the maturity to respond to threats super low. And you see sort of similar trends among all the other countries as well. Sweden maybe sticks out as being the most dramatic difference, but you see a similar analogy. What we as Clavister has done to help in this matter is addressing our effort towards 4 main target customer groups. The common thread among those customer groups are that they represent mission-critical applications, typically industries or sectors that are highly digitalized, but also highly relevant for society. If these suffer from a cyber attack, the consequences are dire. We're a small company still, 100 employees roughly, so we can't span over all the various industries in the world. We have focused on a few. Public sector in Europe, including municipalities, regions, state agencies, and so forth. Critical infrastructure, mainly then the energy sector. And given what we've seen in Ukraine, this is an area that is completely underfinanced when it comes to cybersecurity. Defense, which I will get back to in a while, and telecommunication. The reason why I chose to talk more about defense here is mainly due to quite an interesting announcement we made last week. I could speak long about the other offerings as well, but we have short of time, so defense will be the focus. The portfolio we have in defense today has grown to become quite broad. It started off as using our firewall technology in certain specific applications within defense, but over the past year, we've expanded that offering to include also our more standardized firewalls being used in defense or military data centers. Eurofighter is one of our reference customers in that area. We use our knowledge within 5G or 4G LTE security in order to support cybersecurity also in the private mobile networks that are being built for defense purposes. We have our identity and access management solution that is starting to seamlessly blend into the cyber defense offering as well. And our latest addition being our artificial intelligence. Every reputable company needs an AI offering, obviously, including Clavister. We acquired a company 1.5 years back that has a very, very mature, very powerful AI technology. We have now incorporated that into our portfolio and demonstrated that in use with our customers to be able to detect anomalies, zero-day attacks, and quite sophisticated threats. Last week, we announced what we call a design win, which I'll come back to what that is, with the European branch of General Dynamics. General Dynamics obviously is one of the largest defense contractors in the world, in par with BAE Systems and others. European Land Systems is their European branch, approximately 2,400 employees, headquartered in Spain. in Madrid. This picture is from the FINDEF event that was held last week, where representatives from the Swedish Defense, the Swedish ambassador to Madrid, also representatives obviously from General Dynamics and from Clavister, held a quite big event to announce this partnership. The portfolio of General Dynamics, quite obvious, defense platforms of various kinds, both wheeled vehicles and tracked vehicles. Also some other portfolio components that we're not part of. The design win that we announced is part of the NEVA architecture. NEVA short for New Electronic Vehicle Architecture. So this is essentially an investment that General Dynamics is making to modernize their fleet of vehicles. And what you see in the background here is from the trade show, a vehicle from General Dynamics. You see the NEVA, you see Ciberseguridad, and the Clavister logo behind. So basically, Clavister being appointed as the cybersecurity provider to this new architecture. So essentially what this means is that any future vehicle coming out of General Dynamics European branch that goes for this new architecture will potentially have Clavister technology inside. I'm saying potentially because this is a design win. Then obviously various defense programs start, various contracts are to be signed, various configurations are to be established. So it's still a journey before we see cash flow from this deal, but this is exactly how our relationship started with BAE Systems as well. So a very important milestone. And given the fact that they are publicly announcing it, obviously holds for something. I'd just like to explain a few words on the offering from General Dynamics and the potential behind. This is one of their platforms. It's called the ASCOD platform, the ASCOD vehicle. This is a tracked combat vehicle or infantry vehicle. It's sort of in the same family as the BAE Systems CV90 or Rheinmetall Lynx product. Approximately 1,000 vehicles produced to date, mainly being used by Spain, United Kingdom, and Austria. This is more or less the same magnitude as the current footprint of the BAE Systems CV90. They have roughly 1,100 or 1,200 vehicles in operation today. The opportunity at hand for Clavister includes what we refer to as a midlife upgrade. So typically after some 10 years or so, these type of vehicles need to be upgraded. When they are upgraded, you replace, upgrade engines, you upgrade battle command systems and the electronic systems. And as part of that, the new architecture could come handy in. There is a new program that was recently commenced by the Spanish Army. This program aims for replacing 2,000 vehicles of a completely different type, called M113, with the new ASCOD vehicle. This is a program that is scheduled to start in 2024 with the first deliveries. Obviously, this could serve as a fantastic potential for us if the product is being included in that program. General Dynamics have a second vehicle as well, called the Piranha vehicle. This is a wheeled vehicle, competing, for instance, with Patria and their wheeled vehicle. This has a much broader installed base. We're looking at 11,000 vehicles in operation today. Some of the operators include the Swedish Army, the Danish Army, the Swiss Army, and the Spanish Army, of course. Same here, when these type of vehicles are up for a midlife upgrade, then that could serve as a business potential for Clavister. What more is that there is a consortium called TESS. Included with General Dynamics is also Indra, a big infrastructure provider, and others. This consortium will deliver 348 new vehicles of this model to the Spanish Army. But there is also an upside with potential up to 1,000 vehicles. So quite big investments being carried out by the Spanish Army with General Dynamics. So all in all, fantastic potential here. Some of you might have seen this slide before, but obviously now when we made this announcement, it's time to update this slide. Since before, we have our framework agreement with BAE Systems. We have our first design win specifically for the CV90 platform. We've won already 2 defense programs, the first one in Norway, the second one in Holland. There are a number of prospects, and you have probably seen the fantastic order intake that BAE Systems have recently. So the list of prospects are obviously longer. The first ones at hand include Slovakia and Czech Republic. Quite large amount of vehicles. With General Dynamics, we can now add to this yet another design win for the Neva architecture with the prospects that you just saw in the previous slide. So both the ASCOD vehicle and the Piranha vehicle represents then different kinds of prospects, and of course others as they go for additional defense programs. Besides General Dynamics, we continue to work with other contractors, including Saab, including MBDA in Italy, Eurofighter, and so forth. So hopefully, over time, this slide will become very busy. It starts to be busy already now. Before leaving for Q&A, bit of the numbers of Clavister. We introduced a new metric as of our previous interim report, our Q1 report, annual recurring revenue. Reason being that we shifted business model approximately 1 year ago, moving away from a dominant perpetual or one-time revenue model to a more recurring subscription-based revenue model. And as it goes, obviously, annual recurring revenue is the market de facto term for that. Year over year, we've been able to grow our recurring revenues with 16%. So by 31st of March, we ended with approximately 110 million SEK of recurring revenues. So this is all from our software licensing contracts that sort of keep on feeding us with recurring revenues as we go. In terms of other key metrics, order intake, you see quite a clear drop year over year, rolling 12 months. This is explained by specifically this new business model. When we change business model, when any company changes from perpetual to recurring, we experience a drop in top line. The reason why order intake is dropping is typically before we saw average of 3, 4, maybe even 5 years worth of contracts that we signed immediately, and that of course drives top line in terms of big order intake. With the new model, we see typically 12 months contracts and then recurring. That's the explanation for that. Net sales growing, clear trend. In terms of our gross margins, we set out an objective to have above 80% of gross margin. With some few exceptions, we've been able to maintain that level. And as we see more and more effect from our recurring software contracts kicking in over time, this level will slowly but surely continue to climb. We might have from quarter to quarter, outships of or larger volumes of hardware that would temporarily reduce gross margin, but the trend is quite clear. And last, but maybe most importantly, our EBITDA trend. When going back a few years, starting 2019, we saw quite some heavy losses on EBITDA levels. We've been able to move this trend upwards, and Q1 was the first running 12 months worth of positive EBITDA ever in this company history. But we also had three quarters of successive positive EBITDA. So obviously big milestone. And if we look at our outlook going forward, this is the same outlook that we talk about in our interim report as well. Our ambition now is to continue to grow our top line growth, to continue to accelerate that, to reach approximately 20% or above that for the 3 consecutive years now in average. The drivers behind that is obviously orders that we have already secured, signed within defense, for instance, but also the average or the general improvements we're making in other parts of business. We've reduced our cost base quite significantly over the year, so that will continue to in combination with the increased top line, of course, will continue to have a positive effect on both EBITDA and cash flow. So we still maintain the outlook that we should achieve positive operational cash flow in the second half this year. So with that, thank you.
Thank you for that. Let's move on to some questions. So given the recent events in the world, could you talk a bit more about how this has affected your company specifically? Have you seen a strong increase in demand following this? How do you think this will develop?
I mean, obviously we have. There is no secret that, you know, the geopolitical situation has just exploded the defense budgets, and that as we see in the demand in the pipeline we're building in defense, it has a spillover in our defense business. A few words on the other businesses. If we take our identity and access management business, for instance, that had a good impact. A big driver was the remote office. The entire effects of the pandemic was driving that business, and we continue to see that being driven. Given that we have picked 4 customer groups that are less sensitive to the sort of overall economy, I think we're not that affected, at least not yet, by the overall sentiment on the market, the inflation and so forth. Public sector, obviously not that affected. Defense, absolutely not affected. Critical infrastructure, less affected, I would say. Maybe in telecom, we see a bit more hesitation in taking on new capex investments because of the overall economy. But that's the one.
So do you currently see the highest potential in the defense segment of your business, or could you talk a bit more about how you view the potential of the different
Absolutely.
segments?
So I think what we see is that our base business, if we can refer to it as that, being our firewall business in general, our identity business, those represent quite high volumes, recurring revenues, stable growth, but not hockey stick growth, but stable growth. Those will continue to evolve, and that's where we essentially base our sort of cost structure on. We should be able to maintain our business just with those two, because they are stable, they are predictable. Then defense, obviously, given the size of the orders and the potential, serves as a perfect, you know, leverage on top. But also, of course, with more troubles to predict properly, long lead times and you know, rollout times are typically over many years. But absolutely, in terms of absolute numbers and potential, defense sticks out positively.
All right, thanks for that. You spoke a bit about the numbers at the end here, and as we could see, EBITDA has been trending upwards, I assume, as you've gained scale in the business. Could you give any comment on what kind of scale the company needs to reach to reach profitability?
I mean, if we continue on the track we're right now, you know, the trends that we've been showing, as I mentioned, we should be able to reach positive cash flows operationally in the second half. So we're not that far away. And it has been obviously helped by the combination of both being able to drive top line and at the same time quite dramatically reducing OpEx. Those, you know, the net effect you get from those drives EBITDA and cash flow very positive for us.
All right, so let's finish off with a bit of dreaming. Where would you like to see the company in 5 years?
I mean, obviously, we would like to see much higher top line numbers, of course. And I think given the verticals we're in, that's not unrealistic. We just need to make sure that we stay focused on the execution plan that we have and continue to build this momentum that we have and not dream away and go haywalk. We need to stay focused, that's clear. But I think we're also geographically right now limited to quite few, you know, geographies. That serves as a, you know, as a blueprint, I would say, to gain growth in other areas of the world. But first things first, we should reach our targets first, and then we can scale from that.
Thank you very much, Jan. That's all we have time for.
Thank you.
And thank you all for listening.
Okay, hi and welcome everyone to this next presentation here at ABG Investor Days. My name is Simon Granat. I work as an equity analyst at ABG, covering IT and tech companies. And in my coverage, I have Pricer. So we are very happy to present Magnus Larsson, CEO of Pricer, who will present the company for about 20 minutes, and then we will follow up with a shorter Q&A session. So with that said, Magnus, the floor is yours.
Thank you very much, Simon. Thank you everyone that's here, and thank for everyone that's online. As mentioned to the people here in the audience, I do this in English. If there are any questions in Swedish, we can do it afterwards as well. Delighted to be here. I will try to make a general presentation on Pricer for those of you that don't know the company that well, and then I'll hopefully have some insights also for those that have followed us or are shareholder as well. So it will be a mixed bag. But I would like to start with our vision. We worked quite a lot last year on our strategy. Where do we want to be? How do we want to address the market? And I felt that we had to do something on the vision. So we spent a lot of time with the management team. We tested it with customers. We tested it with the board, of course. And this is what we landed in. We want to become retail's first choice in shelf edge, automation and communication. So what does that really mean? I think if you're a non-retailer, the first word that you might actually react on is the shelf edge. For most retailers, if you speak about shelf edge, that would pretty much be anything in the store that is doing some kind of promotion, something that it's not the product they sell. If it's on the shelf edge, if it's hanging in the roof, it's on the wall, it's all shelf edge. So to us, it's indicate that we are working in the space of the physical store. First choice, what does that mean? Well, do we want to be number one in every single market? That would, of course, be nice, but given the possibilities we have to develop the company, the boundaries that we have, we want to make sure that we are the first choice from the retailers. So their preference in every single interaction with Pricer should be they want Pricer. From the first meeting they have, could be in a presentation or at an exhibition, or it could be the first tender they get, the first customer support they have. Whatever it might be, we want them to say that Pricer is by far the best choice. Then we can make up our mind if we want to be their number one as well. Today we are number one or number two in France. I actually don't really know. But assuming that we were number two, would it make sense to invest more money to be number one in the French market? Probably not. Then it's better we take that investment and make it in a market where we want to be number one, like the US. So that's the rationale behind the first choice. Then automation and communication. We have historically focused a lot on automation. How can we help a retailer be more effective in the store when it comes to replenishment, picking, how to work with price updates? But we haven't spent that much time on the communicative part. How can we help them with promotion? How can we make sure that they actually increase the customer spend in the store? That they stay in the store, it's a pleasant experience, and that they actually put a few extra items in the basket, and preferably something where they have a better profitability from the shopper point of view. So that's what we're actually covering with the vision. Are we there now? No. Wouldn't be very compelling vision if that was the case, but that is clearly ambition. It will take time. So whatever we do now, this is what we think about. This is also, I told my colleague that this is a mandate I give them. If you are in charge of support in Italy, as an example, and they feel they need to take a decision, they can always make the choice. What I'm doing right now, is that making us retail's first choice? So I told them, it's a mandate I give you now. Let's use it, make sure that we have happy customers, make sure that we are continuously first choice. That means that we will probably make some decisions that are not the right ones, but they're decisions that we then can manage later on, and we make sure we keep a happy customer. So for those that don't know us in detail, we were founded in '91. So we are more than 30 years old as a company. We have primarily sold digital labels where you do the pricing. That was the original idea. And out of those, we sold something like, it's actually more than, probably closer to 290 million labels by now, that we have in more than 22,000 stores across the globe. Round about 200 employees. We are growing the number of employees as well. We'll come to that. And we have been growing quite fast over the last year. The market is growing fast, and our ambition is actually to grow faster than the market. I think we managed last year, but I'm not entirely sure because it seems like the market is growing very fast. So what are driving the market growth? There is a very recent study from Gartner by their analyst Sandeep on what are the key priorities for a CIO in retail space, where he's been interviewing people from the tier 1 retailers across pretty much all segments, grocery or do-it-yourself or whatever it might be. And these are the three main ones, and Sandeep called it the triple squeeze. It's of course the inflation. For most companies, inflation is a bad thing when it comes to growing their business. For us, it's been a good thing, because when a grocery retailer, when a retailer are facing inflation, they need to do frequent updates. And to give you an idea, now during spring, Carrefour in their hypermarkets, they were making 20,000 individual price updates in every single hypermarket in France. And if you want to do that with paper, it's virtually impossible. So here we can see that this has been pushing the interest and the need to invest further. It's also getting more expensive with staff in many markets. Some of them has been just a general increase due to the inflation, but then we have markets like the UK where we see that after Brexit, it's been more difficult to actually to get staff, which would be the third, would be one of the parts, but also to actually the pricing and the salaries of the staff has gone up, which is also a driver to say that yes, we need to digitize in the store. Sandeep is also referring to continuing supply chain disruption. We actually don't see it that much right now. We see that from our point of view, the supply chain has improved, but this is probably more referring to what the actually retailers face when they need their supplies to actually fill the stores and fill the shelves to sell it. But what we see is that this has also actually been improving from our point of view. So what do they spend? What do they want to get out of the money they are investing? And they plan to actually invest now over this is the previous 2 years, but I think that this will be pretty much the same for the coming years. Customer experience is number one, and this is not only for online, but this is also the physical brick and mortar store. We can see that making the physical store relevant is really important for the customers that I meet and that my colleagues meet. They have an online presence often, but they want to make sure they have an equally attractive physical preference, and they want to drive customers into the store. Grow revenue, I think that's pretty obvious to anyone in business. Operational excellence, cost efficiency, I mean, that has been one of the key drivers for what we do. But I think also now looking at introduce new product services, business continuity, resilience, all these things are part of in an increasing discussion with the retailers. I will come back to that one on how they want to position the Samsilver store. I will cover that a little bit later. But these are some of the key reasons when they actually make an investment. But I think right now the customers that I meet and that we meet, they are mitigating risk. They want to make sure that they do not have the risk. Now, inflation, they want to make sure that there is the right price on the shelf, so there is no difference. And I think that has been driving the risk of actually not increasing the price in time when their costs have gone up. So either selling at loss or selling at the low profitability is really the number one issue. That is pushing a lot of investments. We could see it last year where people with a contract and readily available money, they were making investment decisions. That were typically franchisees. You have your own store, you belong to a central group where there is a contract with us or someone else. They made a lot of investment decisions last year. So we could see that the growth in this specific segment was almost growing, I think 4 or 5 times, only in Q4. This year we can now see that the retail owned and operated stores, like Carrefour's or Tesco's, their own stores, they are now investing. So last year they did the budgeting. Now we can see they're actually doing the investment. We can see it from the discussions we have had at the numerous exhibitions, but we also see it now from the orders that we start receiving from these customers. They have to do it. And we had a CEO for a larger retailer that we spoke to a while ago, and he said, I have no choice. I need to make an investment. And yes, we're in discussions with these guys. We hope to sell. It's not a done deal, but we can clearly see it's a need, and they have not worked with anything but paper before. A reminder on where we want to be. So you saw the vision. So the vision will help us reach this target, hopefully. We want to almost double our revenue compared to 2022 at 4.5 billion Swedish krona. We want 10% of this revenue to be recurring. So this is a change, a pretty major change for us, where we've been very much of a hardware and software company. Now we're moving more clearly into SaaS and solutions. Our technology should be cloud-enabled. That's actually a phrase that I stole from one of your texts, Simon. I really liked it, cloud-enabled technology. So we're actually pushing the configurations up from the hardware into the cloud, because that also gives us a new opportunity to do new business models and totally different types of business models. So you will see more of this when we monitor the recurring revenue. And the target is that you should see it now ticking up until it reaches 10% at the end of 2025. And then, of course, I need to do some bragging. A few weeks ago, we got an announcement from Carrefour that we've been selected as their exclusive vendor for 3 years. This was actually not a given. It was a pretty hard procurement round. We know that their procurement department, they were looking at having 2 different vendors. I think that was actually what they wanted to do from start. So we of course hoped that it would be us, even that was not a given either. But at the end of the day, we had a lot of discussions. Of course, there was negotiations, there were tough ones, but we landed in winning everything. And I think what actually made it flip to our advantage to be the sole supplier, and actually instead of getting the desired 2-year but 3-year contract with Carrefour, was they made shootout between us and competition. They did basically massive price upgrades, and they were checking, how things were going. And out of the number of stores that we had, and the stores the customer had, the competitors had, we actually got 2 customer complaints. But they were not from our stores, they were from competitor stores. And we could see that they had serious problems actually getting the volume of prices updated on the time needed. And I think that was probably one of the reasons they actually decided to go all on with Pricer and continue with ourselves. We have had a contract with them since before. We've actually been working for almost 20 years together. Here we can see it's exclusive, it's a global contract, but the focus is what they call the G6 countries. It's France, it's Belgium, Italy, Spain, Romania, and Poland. And we've been active together with Carrefour in primarily France, Belgium, Italy has started to grow, Romania started to grow. But now we can see that there's a clear intention to actually deploy in all these countries and to actually harmonize the installed base to actually make sure that when we're done, it should be all Pricer. That's the target. And we haven't communicated any numbers, but we are working very close together with the Carrefour team to actually do the joint planning on all the markets, on what is the numbers, what are the formats, how should we progress. So you will actually see the result on the quarterly result. I would be dying to actually tell you more, but I'm actually not allowed to do it right now. What I would like to also highlight here is actually, normally when we do this kind of releases, it's quite common that we would actually give an example, a proposal to the customer saying, this is what actually the press release could look like. And then they will say, yeah, this is good, this is not good, and then they will take it ahead. But actually this quote was written by Miguel and his team on their own. And what I really liked was, of course, he highlights pricing, automation. That's what we've done jointly for a long time. But now he also put emphasis on promo and retail media. And retail media is now, you can say, the collective name of any kind of communication within the store, where you merge what we have done historically, the digital labels, but also digital signage, where it's communication across any screen. And we can see there is interest in actually most markets now to actually do this. And the intention is to really improve the customer experience, to improve the customer spend. So actually when they leave the store, they leave happy and just dying to get back to the store to do another purchase. Well, maybe that's my dream, but that's sort of the decision that we want them to go. And we can see that also customers like Carrefour are hoping that this market will develop. So it's still in early phase. We have done the launch of the products. We are now busy installing it at a number of customers. It is pilot installs initially, because just like ourselves, the retailers want to test this. Can they actually get the money out of it that they expect? So it's about where do we put it in the store, how do we communicate, and what is actually the return. So we want to be able to correlate the actual increase in sales that they get from the system with the signage that we actually put up. So we will, for the first installs, monitor this to make sure we can come back with actually tangible numbers. So it's of course good for the sales pitch to our customers, but also to be able to present to yourself saying that this is actually what we believe could happen on the market. And this is an example of what it could look like. Here you have a merge of our digital labels and the signage. This is something we presented now at the Euroshop exhibition in Düsseldorf a few months ago. So typically you can imagine a promotional corner in the store. You would not have this everywhere in the store, but maybe you would have it in 3, 4, 5, 10 places, depending on the size of the store. You would typically do it together with the brands, whomever they are, where you actually have an appealing video, an eye-grabbing video that will make people look and hopefully then catch their interest. But we also have virtual digital labels that you can see on the screen. They could be transparent, they could look like one of our labels, it could be pretty much any format. And this has created an unexpected large interest actually, not only within our retail customers, but also within restaurants as an example, that see that these LED stripes and the way we present data has been something they really like. So we're testing it, might be something new, or we just realized that it's been good to test it. This is the first install. Next will be that we'll communicate across any screen. Same system, same databases, same everything. But then we will also look at adding engines for advertisement to make sure that for the retailer, when you have the system in place, they should be able to actually do the advertisement the way they want. If they want to do their own commercials, do they want to sell it to brands? Do they want to sell it to Google, should Google be interested? That's the next step, and we have had a lot of these kind of discussions as well. But so far, I think it's a market that has to be tested. It's interesting, it's strategic, but we need to also prove it. So you can see it more as a commercial opportunity at this point of time than a commitment that it will be a great thing. We have also been working more with our basic offering. I feel that over the last year we did a lot of different things. So now we want to make sure we go back a little bit to basics. The focus has been on how do we actually help a retailer present themselves in the right way. If you imagine that you have a duty-free store or you sell a beauty store, these guys, they have spent millions on making sure the store looks exactly the way they want. Then the question is, having a plastic tag with white frame and glass, is that exactly the way they want to present themselves? Some of them, yes, but some of them feel that maybe this is not the right way. So we spent a lot of time thinking, how can we address that specific need? So we are now, both from an innovation point of view, looking at the future of ESL, but we're also trying to find different form factors. And to the left here, you find a label that we just now launched. We are installing it in the first stores to really verify the feasibility. We call it the hang tag. It's actually made in a way that you get the perfect image. You should be able to present yourself the way you want, but you should actually be able to do it on the hook, like you see on the picture, and without having to lift the label. And then this one, it's called, you can take a blister pack like this one and just put it on or put it back. So from a customer point of view, extremely easy. And imagine that I spoke to one of our competitors at the exhibition, and they said that this was the talk of the town in their booth, because today on the market, like, there is nothing really like this one. You have other versions, but it's also a way to see, and this is something that especially the do-it-yourself stores, imagine Bauhaus or Brico Dépôt or Castorama, that they would actually be interested in. And then, of course, we look at 4-color. And we have seen a massive increase now in interest from 4-color, which went from interest to hype to actual orders and installation. So we communicated that we are actually doing now 5 stores down in Skåne region with ICA, only 4-color. We have it now in Canada, we have it in US. We just won our first smaller chain in the UK. And it's not insider information, it's a small deal, but it's a first deal. So it's only 4-color. So that's something we'll, as soon as it's installed, that we will actually present. We see it from Australia, New Zealand, Japan, everywhere. This is actually what people are talking about. And we have a very good position on the market when it comes to 4-color. We're also discussing it with a lot of the key retailers in the US market, where this has been one of the key things. So that's why I wanted to also highlight the 4-color. We are also looking more on the different sizes than we did before. We had a tendency sometimes to close the door a little bit too early, saying it's not part of our portfolio. Now we changed the way we work to make sure that we can build prototypes very fast. So if someone said, I want this size, we can actually make it quite fast within a month. And if they then say that I still want this size, but I want to have 1 million units or tens of millions of units, well, then we still can do it at the right price within, let's say, 6 months. So we have sort of modularized the way we work, which has also been one of the things to actually get the core right. This was not possible before. Where do we focus? US. It's a market that is growing immensely, and I think now it will grow even faster. There was an announcement that one of our competitors is now going to go ahead with a 500-store deployment. I'm extremely happy to see that, because that's also very easy for us to now go to the other customers and say, well, now you see this happening, so let's go ahead. We are, of course, in several discussions as well. So it's hard to say, will we see it happen now during autumn, that the first orders will come out? Will it be next year? I cannot really say. I can keep my fingers crossed. But that it will happen, I have no doubt. UK, I was presenting at the Retail Technology Show in London a few weeks ago. And compared to before, it's a totally level of dialogue now with the UK retailers. They've been careful before, but now we can see there's a tangible interest. Once again, they have money. They want to go ahead. So I think we will see a lot of things happening in the UK market. So this is one of the markets where we will engage more and invest more. Australia shows a clear interest. France, I thought it would be pretty much nothing happen, since it's a mature market, but it's a lot of ordering happening. It's to my surprise growing. Spain, you can expect more business here. And in Germany, we haven't been successful so far. And we will probably not be successful this year either. But we're now laying the foundation to be successful into the future. So I hope to be able to present to you success in Germany, maybe not this year, but a little bit later. I see that is it time to wrap up?
Yes.
So I will just quickly say, we have spoken about a factory in Germany. We are now producing out of Bavaria. We now had the official opening. So this is the combination of our Pricer team and the Solner team. We own the gear, we own the IPR. It's actually a setup that we can choose to put everywhere, anywhere in the world. Actually everywhere as well, but where we want, because it's actually based on fully optimized production. Should I do a final slide, Simon?
Go ahead.
Where do we spend our money? Sales and delivery. We see this massive customer interest. We need to make sure that we can capture it. So we are investing in salespeople and delivery people. Anything that's actually needed to ensure that we get whatever we sell out to our customers. We are deploying now a second R&D site. We'll do it out of Taipei. The recruitment is ongoing, and we expect it to be operational during autumn. It's a way to get more people and more engineers, but yet keeping the cost of growth down, so we can actually reduce the OpEx per head. Supply leadership. If we are to grow as we plan, we need to make sure that when we do that, we are effective in our supply, both from a COGS point of view, but of course also from an environmental point of view. And getting factory close to our customers is a big part of that, to get the supply without too much carbon dioxide footprint, but also to make sure that we have short lead times and we actually don't tie capital longer than needed. And finally, thanks Simon, Cloud Tech. What you will see from us will be Plaza-based, and that's our SaaS solution. It will be Plaza-enabled. If you want our technology, you will have to buy our SaaS solution. It will be the entry ticket to all things Pricer into the future. That's pretty much what I wanted to say.
Thank you so much, Magnus.
Thank you.
Certainly an interesting presentation and a growth journey that you have entered for many years, and looks to be also promising down the road here.
Yes.
But just to complement your presentation, I'd like to ask a couple of other questions,
Please.
not only about the growth opportunities, but the gross margin has been in decline for some quarters. Could you talk a little bit about the gross margin outlook going into H2? You talked about it in conjunction with the Q1 report, but what do you see here?
I'd be happy to. So there's been a number of things affecting the gross margin. during the pandemic and then the war in the Ukraine, of course, you could see that there were impact on costs. But we can see that that has been improving. So I think that what we are doing now, we have done a lot of strategic. Actually, we have set up 5 strategic programs. One is on working capital, another one is on how to address the COGS, where we look at everything from the procurement, with which companies we are working. We look at the design of the product. We look at the portfolio. We have had a lot of different products actually in the portfolio. So now we're cutting the portfolio down. We are looking at the processes where we're moving from more of a forecast-based process when we do the product planning to order to production, to actually tie less capital and consequently cost. We are looking at the product mix where we sell more premium labels with more battery, more functionality, 4-color, and we also look at increasing the prices. So we actually had the last successful price negotiation where we increased price of one of our larger customers. We just closed a month ago or so. So we are taking all these kind of measures. We choose last year to communicate the financial targets in terms of revenue, recurring revenue. It is reasonable that we'll return with a profitability target. That we said that so far we're choosing not to do it. We want to make sure we can deliver on the commitments that we've done so far. But we will come back with a profitability target also, because right now I would like to guide you on some kind of financial target that will give you an idea of where we will land. But right now I can just have to keep saying that we will see tangible improvements of the gross margin over the year. And once again, we do have a plan and we do take the necessary steps. But since we haven't communicated these numbers, I cannot guide on. And I know it's difficult when you follow us.
That's great. We are actually running on overtime, but just a very short comment perhaps on the recently announced share issue for Q3. Could you give us any more color on this?
Absolutely. So we announced that we'll do a share issue. What we'll use the proceeds for the growth. You could say that we expect that roughly half will be used actually as a financial cushion to make sure that we can finance the growth. Doing that kind of growth that we look at, it will tie a lot of capital. The remaining part will be done for both increasing the sales and the delivery organization, then focusing on R&D to actually invest in especially now the hub that we have building in Taipei. And then, but also on production. We are thinking about, we haven't made any decision, but we are interested in setting up a factory in the North American market. We believe that given the interest we see on the customer and how I think the Americans would appreciate a made in the US stamp on the digital label, that would be great. So those are the key things where we actually want to spend that money.
Thank you so much. Our time is up. Again, thank you for coming here today, and a big thank you also to the audience.
Thank you very much. Thanks everyone for coming.
Hi and welcome back. My name is Gonzalo Artiach, and I'm a pharma biotech equity analyst here at ABG. The next company presenting today is Xspray Pharma, and we have here with us the CEO, Per Andersson. Per, the floor is yours.
Tack så mycket, Gonzalo. Xspray är en lite annorlunda bolag i life science-världen, och det är på grund av vår affärsmodell som vi har. Och man kan fråga sig vilken typ av upptag man kan ha på marknaden och hur snabbt man kan komma på marknaden. Jag hoppas att jag kan berätta för er hur våran modell tar oss rätt raskt in. Och den stora frågan för oss är väl lite grann, kan vi nå 1 miljard i försäljning under det första året eller inte? Så låt oss titta på det och hålla det i minnet när vi tittar igenom presentationen här. Först och främst behöver vi naturligtvis väldigt erfarna medarbetare, vilket vi har. Vi har både innovation, vi har den kommersiella sidan som vi precis har införskaffat oss i och med att vi ligger i den kommersiella delen just nu. Vi håller på att få FDA-approval och vi ligger i startgroparna för lansering av vår första produkt. Och så har vi ju naturligtvis kontroll som man måste ha i det här också. Vår vision som vi har satt upp för oss är att vi ska sälja för någonstans runt 4 miljarder kronor 2030, alltså om 6-7 år. Vi ska ha en rörelsemarginal över 65%. Vi kommer att ha 5 förbättrade produkter på marknaden och vi kommer att ha 6 stycken produktionslinjer. För den här affärsmodellen utgår ifrån förbättrade produkter, förbättrade cancerprodukter med en unik teknologi i bakgrunden. Så vi har utvecklat en teknologi som råkar funka för en av världens största marknader för anticancerbehandling. Det är nästan som en form av förvandla cancer från en dödlig sjukdom till en kronisk sjukdom i många fall. Om jag går åt rätt håll så ser vi vad vi ligger i våran pipeline just nu, och då ser vi att vi har Dasinoc som ligger inför FDA-approval. Det är en produkt som är en förbättring utav en anticancerprodukt på amerikanska marknaden som säljer för 1,5 miljarder. Och vi ser framför oss att vi kommer in som den enda konkurrenten till dem. Vilket betyder med en förbättrad version, vilket betyder att vi kan ta en signifikant del av den marknaden. Så det blir väldigt exakta siffror för oss. Vi behöver inte spekulera så mycket, för vi vet att Dasatinib på amerikanska marknaden säljer för 15 miljarder kronor om året. Vi har en plattform så vi kan adressera 80 olika produkter som finns på marknaden idag. Så vi har väldigt många produkter att kunna välja mellan. Och då får vi välja noggrant, och då har man en noggrann urvalsprocess som vi arbetar med. Vi har också flera produkter som är på pipeline som kommer för senare lansering som vi har arbetat upp i våran pipeline. Om vi tittar på de här produktkategorin, proteinkinashämmaren, så som sagt, de förvandlar cancer, dödlig sjukdom till en kronisk sjukdom eller förlänger livet signifikant. Det är den största enskilda produktgruppen mot anticancer försäljningsmässigt på den amerikanska marknaden som vi adresserar. Kom för 20 år sedan, alltså 2020, år 2000 kom Glivec in, som kom in som the bullet for cancer. Där ni kan se hur överlevnaden förvandlas från att väldigt få överlever till att nästan alla överlever på 20 år sedan den här medicinen kom in. För just en kategori utav cancerpatienter, de med kronisk myeloisk leukemi. Sen kan ni se i mitten kolumnen hur den här worldwide sales utav de här proteinkinashämmarna som nu är mer än 80 stycken, hur de har växt till att vara över 31 miljarder dollar 2020. Alltså det är en väldigt stor kategori utav mediciner som är bromsmediciner, om jag får säga så, mot cancer. Men de har en sidoeffekt också, det är inte helt löst, utan man får se också hur publikationer kommer upp där man upptäcker att men de här tar man ju oralt, man sväljer dem. Då får man inte den exakta mängden i blodet. Och så beror det på vad magen har för kemi. Har man ätit, ja då i nilotinibs fall, då kan man dö om man äter och tar tabletterna samtidigt. Är det så att man äter den tillsammans med protonpumpshämmare, alltså Losec och andra sådana, omeprazol, då kan det vara så att man inte får i sig tillräckligt och att cancern fortsätter att utvecklas. Så det finns problemställningar i den här delen. Om vi tittar på kronisk myelotisk leukemi som den här Bullet Against Cancer var för, så är den fortfarande en jättestor marknad. Trots att den första produkten har blivit generisk. Alltså den från 2020, den från år 2000, den har gått, när patentlivet var 20 år på den ungefär, så den gick generisk 2016 här. Och vi kunde se att priset höll sig väldigt högt i 3 år efteråt. Alltså bara ner till hälften, ungefär som en biosimilar faktiskt. Och området har 5, numera 6 olika produkter på sig. Vi fokuserar på dasatinib som är Sprycel som originalprodukt just nu och Tasigna som är nilotinib. De heter oftast någonting med nib, de här föreningarna. Så dasatinib och nilotinib jobbar vi med primärt. Dasatinib får en marknad på ungefär 2,4 miljarder dollar då. Alltså den säljer ju själv för 1,5 miljard, men lägger man till second generation TKI som de heter så blir det 2,5 miljard. Och så att och de växlar rätt mycket patienterna. Ungefär 66 000 patienter totalt sett. En av de största cancergrupperna i USA, de var bara 4 000 för 20 år sedan. Men nu överlever de ju, så nu har de blivit 66 000. Okej? Så det här gör att det här området växer också. Om vi tittar på problemställningen på just Sprycel då, så kan vi se att, ja, vi vet till exempel om vi börjar att titta på den här delen där ni ser att vi har den röda grafen nere till höger. Den ser vi hur den kristallina originalprodukten, att om man tar den med protonpumpshämmare PPI, då får man inte alls i sig så mycket som man tror att man ska få i sig. Och då undrade vi, är det något problem då? För det gäller ju, frågan är det någon problemställning med det? Det är klart att det är dåligt att man inte får i sig det man ska. Och efter jag varnar för det, du ska inte ta det här tillsammans. Du ska inte ta magsårsmedicin och anticancermedicin, du måste välja. Och då så tittar vi på svenska registerstudien med 676 personer. Så kunde vi se att 47% av dem fick förskriven omeprazol eller protonpumpshämmare. Och när vi tittar på hur det gick för dem i den här registerstudien så såg vi att de hade en 15% lägre överlevnad, 5-årsöverlevnaden. Så det verkar som att det kan påverka överlevnaden det här. Och när vi tittar lite mer närmare och justerar det för olika saker som kön och ålder och andra sjukdomar, då är det alltså 3 gånger större risk att dö om du kombinerar de här två än om du låter bli att ta protonpumpshämmare. Okej, vad har vi för lösning på det då? Ja, vi har gjort en amorf-version som inte påverkas utav att man tar omeprazol. Så magsår och cancer kan man ha samtidigt i princip här. Alltså du kan koadministrera de två. Okej, och vad betyder det då? Jo, det betyder att vi på våran bipacksedel så kommer läkarna att säga att okej, nu har jag en produkt som inte får tas med protonpumpshämmare och så har jag en ny produkt här som jag får ta med protonpumpshämmare som är precis likadan som den förra. Alltså vad läkarna skulle betrakta som en förbättrad Sprycel. Alltså en bättre dasatinib-produkt. Right, okej, men hur funkar det då? Jo, där är det att när det gäller cancer och alla föreningar så gäller det att få in en rätt koncentration i kroppen. Det ska inte vara för lågt för då fortsätter cancern att växa. Det ska inte vara för högt för då får man oönskade sidoeffekter, till och med sudden death som den heter när det gäller nilotinib. Så man ska ligga i mitten. Och då så tittade vi på den kristallina versionen utav Sprycel, dasatinib. Vad hade liksom original? Och då så ska vi få ett medelvärde där på 920 och det får vi. Men Ni ser att det blir en otrolig spridning, mycket mer än vad jag trodde. Och det här är screenade friska frivilliga som ska vara sura i magen. Så det här är i kontrollerad miljö och ändå från den minsta till den högsta så måste den som får lägst måste ta 40 tabletter för att komma upp till den som får högst. När vi kör den här med våran amorfa del, när vi har förvandlat den här, då måste vi dra ner dosen 30% för att få 900. Och så kör vi den, vi får det bioekvivalent som det heter, alltså samma, med 70%, med 30% mindre dos. Men ni ser att variabiliteten blir bara 1-3. Right? Så det är klart, det blir mycket bättre precision och det blir mer effektiv och mindre farligt. Per automatik, om ni förstår vad jag menar. Så då har vi både fått till att den går att ta med magsårsmedicin samt att det är en bättre precision på den. Och den precisionen kan faktiskt påverka den största biverkningen tror vi, vilket är pleural effusion eller pleuralvätska. Det är när man får vätska mellan membranen i lunga eller hjärtsäck. Och det är ju väldigt ont och det är rätt många, det ökar för varje år man tar dasatinib, så det är en rätt besvärlig sidoeffekt som man har. Så vi tror att vi kommer på sikt att kunna påverka den också, men det får vi se när vi börjar göra studier på det. Så hur är modellen att ta den här till marknaden då? Jo, då är det så här att patentmässigt så har vi ett substanspatent som går ut här, som gick ut 2021. Så nu är substansen fri att använda, men då har bolagen gjort andra patent på den kristallina versionen som går ut 2026. Men vi har ingen kristallin version, vi har en amorf version. Det är därför som vi har behövt dra ner dosstyrkan och att man kan ta den med protonpumpshämmare. Så det betyder då att vi har en annan produkt och vi har ingen kristallint variant. Så vi vill komma in på marknaden så fort som möjligt nu. Men när man säljer för 1,3 miljarder kronor i månaden och man ger sig på en originalbolags blockbuster så blir man stämd. Och det visste vi och det har vi tagit höjd för första början. Så vi har en liten ovanlig affärsmodell som går ut på att vi vet att för varje produkt vi tar ut, eftersom det är så mycket pengar för originalbolaget, så kommer vi alltid att bli stämda. Vad är det de stämmer oss på då? Jo, den kristallina versionen har ett fingeravtryck när man kör röntgen på den. Den ser ut så här. Och den amorfa formen som vi gör, den har inget fingeravtryck. Så vi har inga toppar. Så det som är patenterat är faktiskt 4 av de här toppställena, vinklarna här. En infringing, alltså en som går under deras patent ha. Men vi har ju ingen alls. Och det testar vi innan vi skickar ut det på marknaden. Så det testar fabriken. Och om det finns en enda topp i den här, inte 4 toppar utan bara en topp, så kastar vi det. Så vi kan, som vi ser det, inte bryta mot patentet. Naturligtvis hävdar originalbolaget annorlunda. Och än så länge har de ju lyckats hålla den här processen gående. Så det funkar, så det är enligt plan. Det funkar precis som vi trodde att det skulle funka. Då är frågan, hur ser det ut på marknadssidan när vi väl kommer ut på marknaden då? Jo, då är det så här att det finns 11 000 Sprycel-patienter totalt sett i USA. Vi fokuserar bara på USA just nu. Upp till 50% av dem tar protonpumpshämmare. Enligt vår studie, ni såg 47% hade vi i Sverige. Och det är bara de som får förskrivet. Sen kan man ju köpa det på apoteket bara. Utav dem så säger amerikanska läkarna att ungefär 20-30% av de nya patienterna som kommer som redan är på PPI, som redan är på protonpumpshämmare. Så det är 4200 nya Sprycel-patienter per år. Det är de vi fokuserar på, för det är de vi kan switcha lätt. När vi pratar med våra marknadsundersökningar säger att 8 utav 10 läkare att de kommer att switcha alla sina nya patienter till en PPI-kompatibel produkt. Right? Såklart, du har en som är kompatibel och en som inte är kompatibel. De väljer den som är kompatibel. De kan inte veta om den här patienten kommer att behöva omeprazol i framtiden. Så då varför chansa? För om de börjar äta omeprazol då går ju exponeringen ner och de riskerar att cancern kommer tillbaks. Så det vi har då är att vi tar dem 4200 och sen så tar vi 80% av dem. Och så är det listpriset på den här $205,000 per patientår. Alltså dryga 2 miljoner. Det här blir alltså 3400 Sinok-patienter som då skulle kunna ge $672 miljoner när de går fullåret. Så om man tittar då på den här och tar det här bullish-caset kan man väl kalla det för, att vi skulle ta alla de här 80%. Då så har vi ju en tillväxttakt som är rätt rejäl här. Vi går break-even någonstans runt $50 miljoner. Så då är frågan om den här affärsmodellen är utav det här slaget, att vi kan få ett sånt här upptag. Det här är ju en fråga som handlar om läkarna. Vi behöver ju inte gå till läkarna med en ny mekanism av action som leder. Alltså hur fungerar den här läkemedel mot andra läkemedel? De är ju väldigt vana med dasatinib. De har jobbat med dem i 15 år. De vet exakt vad de har. Vår produkt har samma profil i kroppen. Den är bioekvivalent, men den är bättre. Så alla som vi har pratat med så här långt, alla säger att de kommer att använda den här produkten. Det finns inget negativt i det. Right? Så därav så hoppas jag att vi i våran modell kommer visa sig ha ett bättre upptag i marknaden än vad vi kanske har sett på andra gånger när vi tittar framförallt på nordiska bolag. Om vi tittar då lite snabbt på vad vi har, så bakom allt det här så ligger en teknologiplattform som använder superkritisk koldioxid för att fälla ut de här amorfa formerna. Finns det 2 sådana här 20 meters linor i Italien. De har gjort sitt jobb och det är det här som är det nya och det unique selling point för X-Spray. Att just den här tekniken råkar funka så bra för proteinkinashämmare. Det är det magiska med det hela. Vi har testat 20 stycken, de funkar för alla. Så vi vet att vi kan ta de här 80. Och utav de 80 på marknaden, 80 kinashämmarna på marknaden, så är 60 svårlösliga. Så vi har en stor portfölj att jobba med. Vi har kommersiell approval från italienska myndigheten och vi har FDA som har inspekterat den för någon månad sedan, ett par månader sedan. Om vi tittar bara snabbt på en annan produkt så har vi nilotinib-produkten. Det är Tasinja som är originalförening, det är nilotinib heter föreningen. Den ska inte tas med mat, det kan vara farligt så den ska undvikas med mat. Så att vi har jobbat med den för att ta bort födointeraktionen. Gör vi det så kommer vi ha ungefär samma säljsituation fast lite bättre som dasatinib-situationen. Den här produkten säljer för $900 miljoner om året i USA och faktiskt lite större i Europa och övriga världen, förvånansvärt. Tittar vi på sen vad vi har för andra PKI:er som går ur patent så är det 23 stycken fram till 2030. Så att vi kan välja mellan de här och det är över 24 stycken som säljer för mer än $50 miljoner. Om vi då tittar på var vi är någonstans så ser ni att vi förväntar vad ni kan förvänta er för nyheter. Så har vi FDA-approval på väg nu inom 6-8 veckor. Vi har litigering. Jag förutsätter det, allt kan ju naturligtvis hända men vi har kommit så långt i den här processen så det skulle förvåna oss om det blev besvärligt här. Vi har litigeringsprocessen som är mer oförutsägbar men den har i juli som stoppdatum då 30 månaders stay går ut och då ska domstolen vara klar. Vi betyder alltså att vi måste vara launch ready. Och det gör att vi håller på med lanseringspreparation och det gör vi med Evershana, en partner. Eftersom vi inte vet när vi kan lansera och måste vara rätt beredda hela tiden så är det väldigt dyrt att stå med egen organisation. Så därför så har vi hyrt in oss på Evershana, en konsultorganisation. Väldigt gynnsamt tycker jag. Vi har Heinap Nillo som vi håller på och jobbar med resultaten för att få in FDA submission Och vi har Aktier, en njurcancerförening som vi jobbar med. Alla de här har liksom multimiljardkronors försäljning i USA. Så att vi har ett stort värde att bearbeta. Slutligen, Detta försäljningsprice går just nu som tåget och slår rekord efter rekord månadsmässig sälj. 1,3 miljarder kronor i månaden ungefär. Så varje månad, som ni förstår, varje månad de kan förtjäna oss är det naturligtvis en vinst för dem. När det gäller den här typen utav trial då, se om jag ska bara avsluta att där ligger vi just nu i någonting som heter fact discovery. Det är alltså domstolen i den legala processen i USA för när man blir stämd. Så för fact discovery, de ska liksom titta på våra data om vi har sett något kristallint i det här. Expert discovery kommer sen och så ska man prata om bedöma de data som har tagits in. Vi har skickat prover till dem, tabletter och pulver till dem. Under den här tiden kan man då be om summary judgment och säga det här är orimligt, nu får vi kasta ut det här. Vilket gör att i sådana fall får vi en sån positiv dom, då kan vi lansera här i slutet av året eller i början av nästa år. Annars kan det gå till trial, alltså till domstolsförhandling, och då blir det en senare lansering. Så idag är det lite oklart vart vi kommer att hamna. Vi jobbar på det. Vårt mål är naturligtvis att komma ut så fort som möjligt. Det är 1,3 miljarder opportunity kronor i månaden. Vi har en erfaren styrelse naturligtvis. Och till slut bara, det är så här vi tänker runt vår ambition. Den här typen av affärsupplägg som vi jobbar med. Vi blir stämda, men när vi väl kommer på marknad, då kan vi ha ett riktigt bra upptag. Tack.
Thank you very much, Per, for the presentation. And now we have time for a few questions. I will start with one more like a general question on your commercialization approach. I mean, we know that when new drugs come to the market, especially biotech company drugs that are like targeting a new mechanism of action, it can take time for sales to start picking up. I mean, because you have to educate the healthcare system and so on. With generic drugs, that's a little bit different. I mean, drugs can just like jump into the market and start getting sales there. But you are somewhere in between. You're not like a full generic drug, but you're not bringing a new mechanism of action. I was wondering if you could give us some color on what is the strategy that you have especially for the initial part of your launch for Dasinok.
Well, I think that the initial part is to get the data sorted so that you have the package to go to the doctors with when the litigation is done and the commercialization part is starting. So I would say that right now it's the data, sort of the data that you see here, that is one of the most important, because continue the marketed research in order to know what is the best arguments to address these doctors with. The cool thing with US is that you know exactly where the doctors are and how much they prescribe. So it is to design the sales force. It's in this particular case, it's very easy and very advantageous because you have such a good database to work with.
That's very interesting. Thank you. And a second question is on your partnership with Eversana. I was wondering if you could give us a little bit of color on the background behind this partnership. Also, I don't know if you could share. I don't know how much can you share on the deal structure you have there, and also what happens with the next products that you have in your pipeline, XS008 and 003. Are you planning also? Are they part of the agreement, or those are outside?
Oh, good. That's a good question. No, Eversana deal is on one compound right now, with the option to put in more, of course. It is a fee-for-service type of arrangement where we can access the full team that they have. They have $1 billion of revenue. They are 7,000 people. They have people in their organization that has been selling these type of drugs before. So in a unique way, we get hold of a lot of experience, and that is difficult actually to hire yourself. And it's possible for them to halt and accelerate whether you have a launch go or not. which becomes very important because if we had a full-fledged organization, sales organization waiting for being launched, it costs a lot more than more than we wish for to have that. So therefore, because of that sort of flexible time of launch, this is an ideal sort of deal, I believe.
Okay, and one last question is on the, you recently have announced a new share issue. I was wondering if you could give us an outline of how much does it cover, until when? I mean, if your drug ends up being, let's say, approved or launched in July 24, does it cover until then? Or I don't know if you could give us some color.
But you're absolutely right. The whole sort of financing scenario is to be financed until we have launched the product, considering a July launch next year. So it is 250 million now and 300 million now with 250 million sort of signed up for, and then it's 150 million in November, and then we have I assume FDA approval, and then another 150 million in May, I believe, when we're getting very close to marketing or have launched. So there is warrants included, so to speak, in this system. So yes, it is supposed to cover until we have a product on the market.
Great. No, that sounds very good. But I think we're running out of time. Thank you very much for being here today and for your nice presentation.
Thank you for having us.
Hello, everybody, and welcome back to ABG Investor Days. My name is Adrian Glani, and I'm an equity research analyst here at ABG. Our next presentation will be given by Palle Chevelius, who is the CFO and IR at Nordic Waterproofing. He will give a roughly 20-minute presentation, and then we will have some time for Q&A after that. So with that being said, Palle, please go ahead.
Okay, thank you very much, Adrian. So so let me take you through some slides of Nordic Waterproofing and explain about what we do in our group here. So if I start with our history, let's see, there we go. So you can say that the group Nordic Waterproofing was established in 2011, but we have companies within our group that goes back even to the 1800s when they were founded. So, but in 2011, Axel, the Danish private equity, acquired Trelleborg Waterproofing and the Finnish installation service part of Lemminkainen Group and formed the Nordic Waterproofing Group. Then in the following years, they continued to make some more acquisitions, but also some restructuring, and that led to, in 2016, that they IPO'd Nordic Waterproofing. Then it was a Danish parent company. And we were then at the Stockholm Nasdaq Mid Cap, as we are still. And then in the coming years, 2017, 18, and 19, further acquisitions were done. And in 2020, it was. I mean, we all know what happened in 2020 with the pandemic. So acquisitions was not the key matter on the agenda. But what we did that year was that we re-domiciled from Denmark to Sweden, the parent company. So we are now a Swedish listed group. And then going into 21 and 22, we continued the acquisition drive. So in the recent 2 years, we have done almost 15 acquisitions here. So let me see. Yes, okay. Now it's going right. So what do we do? Well, we basically we are organized in two areas. One being products and solutions, and one being installation services. And we to a large extent we do what we are called. So we would work with waterproofing. We have a waterproofing material being membranes in different ways that protect buildings and other structures from being damaged by water. So a large part of our activities is related to these waterproofing membranes based on bitumen, a residual from an oil refinery. But we also then have material being based on EPDM, a synthetic rubber membrane that you can apply on larger buildings. And you can also the difference between these is that basically the bitumen rolls, they come in rolls, and you put them together on the roof, whereas the synthetic rubber membrane you can prepare in advance and have a pre-manufactured, so you can do larger pieces of the roof at one time, actually. Then we also have a prefabricated facade and wooden and wall elements made out of wood. So like this structure here, a tower in Norway that at the time when it was built was the world's largest wooden building. I think it's not that anymore, but it was 18 stories high and manufactured in our factory that is not far away from this. And then we also have what you could say green landscape. So if you see green roofs in Stockholm where we are right now, it's quite likely it's coming from us. So it will. You have these and also more landscaping like roof parks or inner yards, green inner yards. So that we mainly grow in southern part of Sweden. Let's see. There we go. So then our installation service segment, we also then do installation of the materials we have. So depending on the market, it's a little bit different, but we do install our waterproofing material and also our prefabricated wood elements we do install in mainly Denmark, Norway and Finland. Then we have some activity in Finland where we do flooring, like either in industrial floors or even on cruise ships. So if you go on a cruise in the Mediterranean or the Caribbean, it's pretty likely that we have done the floor on the cruise ship for that one. We also have a company doing metallic facades and eaves and safety system for roofs in Finland that we install. And then we also have a company in Finland where we own 65% about that, where we do solar panel installation. So a variety of installation services, a little bit different on different markets. So you could say that over a business cycle, typically we say that about 50% of our activities go into to new constructions and 50% goes into renovation and maintenance of existing buildings. More in the waterproofing membranes, whereas more, you could say in the wooden facade and roof elements, it's more 90-10, going 90 into new build. We are mainly located in the Nordics, but we also have some activities in Benelux and in UK and in Poland. But we're very much, I would say 85% of our sales goes into the Scandinavian markets here. Oh, sorry, the Nordic markets. So which typically are more stable over time during a business cycle. So about what we do, I mean, it's of course very much about sustainability, and I will come back to some of the drivers for our acquisitions. But the durability of the materials we sell, it's typically above 50 years. So if you put a waterproofing membrane on a roof, you could. We don't have that extended warranty, but the material typically lasts more than 50 years if you put a bitumen-based waterproofing membrane on a roof. You could also say that the wooden constructions that we do in our factories and then assemble on the work sites it actually binds the carbon dioxide into the material rather than as other materials might do, like concrete, they emit carbon dioxide. If you look at the green infrastructure that we putting sedum on roofs or roof landscapes, that generates a biodiversity in urban environments. And of course the solar panel installations give some clean energy for the buildings, and you don't have, say, loss of electricity in the transportation or loss of energy in the transportation there. So looking at acquisitions, I mean, since 2016 when we IPO'd, we more than doubled in size the first 5 years here. And about 2/3 of the growth came from acquisitions and 1/3 came from organic growth. So what we're looking into the building industry, construction industry here. But it could also be to enhance our products and service offering for our customers on different markets, or integrate downstream. So it would be a way for us to secure our products way out to the market by integrating downstream to closer to our customers. And looking at some of the acquisitions we have done, I think if I go back a few years, in 2017 we acquired the Tåsing Elementor. That was the first step into the prefabricated wooden elements business. And in 2018 we acquired a company, Väggtech, in Småland in Sweden, where again doing these urban green environments. So it's a big driver for us to find sustainable solutions that we can expand our product portfolio with. So, but here are some examples. I mean, we also have this Ripatti we acquired in Finland, that is metallic facades, that is broadening the offering to Finnish customers, that to be a complete supplier to them in different ways. And if you look at the Anneberg Limträ, that was an acquisition in Denmark, where we acquired a glue lamp manufacturer that was actually upstream supplier of our Tåsing Elementor business, the wooden elements business. So that's just a snapshot of a few different acquisitions we have done. Then if I look at the financial development over the years since we did the IPO, so you could say that we basically doubled in 5 years, and it's not a target we have set to grow for the sake of growing, but we expect to grow at the same pace with say 2/3 acquisitions and 1/3 organic growth, and over a 5-year period to roughly double in size. It's I would say here, and typically the organic development has been 3 to 9%, but I would say it's fair. In the recent quarter, that has mainly been driven by price increases that due to the cost inflation on input materials. Whereas where we are heading now into a weaker business cycle for construction industry, the volume development can be expected to be negative. And if you look at the EBITDA, it's been fairly stable, I would say, over the years here, but it has been varying between, say, 11 to 14%, with an average of just above 13%. So it's a little bit better when we have a better business cycle, and lower, of course, in a weaker cycle here. But we're not going below 10%, and definitely not into red numbers here. So we've actually never had losses in the group for a year. Okay, and if I take a short look at our first quarter as well, not going too detailed into that, but we had year over year, our first quarter was flat on sales compared to last year. But you could say that what contributed to that was a negative organic growth with -10%, where volume in particular went down 20%. Acquisitions helped us with 7%, and currency with another 3%, and that took us then to a flat development. EBITDA decreased from 91 million the year before to 30, and a similar development for EBIT. And then it's worth noting that we terminated 2 activities in that quarter that had an impact of about 18 million. So we came out on 7 million, taking away the impact in the quarter from that. And then cash flow was slightly more negative than the year before, with -58 from operating activities in the quarter. You would say that the highlights, I mean, one was that we had a large impact from weather. I mean, obviously our activity is very much dependent on good weather conditions, since you're working outdoors and you're working on roofs. And Q1 in 2023 was particularly bad with both snow and rain depending on what geography we were in. But we could also see that demand had an impact from a slowdown in residential new build, and renovation remained fairly stable in the first quarter here. So, but we expect the weaker demand from residential new build to continue, and at some point we also expect commercial buildings to have an impact with a decrease in new build for that area. And I also already commented the weather, and then also is worth noting that our synthetic rubber membranes had an impact from a tougher market conditions, with the new competitors coming up being more price aggressive. So generally, we saw both an impact on volumes and margins for that segment, and then as well with prefabricated wooden elements that had an impact from the lower residential new build, with a weaker market in both Denmark and Finland, where we actually saw an increase in Norway, however. And then our green infrastructure had a strong development in the quarter, but it is very weak. It's a very low quarter for that business, since it's you harvest green material and you put it on the roofs. It's not something you do to a large extent in the first quarter. And then just if I mention the order book for installation services, where we have some 4 to 5 months sight ahead of us, so how it looks like it still remains on a good level on both volume and margins. Second, I would say that the negative development in result, it is the main explanation is the weaker volumes, and explained to a large extent by harsh weather conditions in the first quarter here. And also, as I said, the volumes being weaker in the first quarter, that had an impact. And as well, the one-off impact from closing down 2 activities. So what we see ahead of us is that we expect the construction industry to have some challenging quarters, and as a consequence of that, we of course take mitigating action. So when we can, we reduce cost in certain areas and try to adapt our costume to the market conditions to be prepared for the future. I would say that in 21 and also 22 had a large impact from high cost inflation on our input materials. What we see now is generally the cost has either stabilized or actually started to decrease for our main input materials. So and finally, maybe mentioning that, I mean, with the increased the higher interest environment that where we have right now, when we look at new acquisitions, we're a little bit more, how to say, restrictive on how we view this, partly because of the higher cost for financing, but also where we maybe still have a high multiple environment and good years for the targets we are looking at in 21 and 22, setting maybe the expectations from the seller higher than we are willing to pay right now. So we still have a high focus on doing acquisitions, but in short term, we will do selective acquisitions where we find the multiples and the prices to be fair and reasonable. But otherwise, we might wait and see how things develop and before we do acquisitions. And I think I jump these numbers, but I think it's just maybe having a look at this one. It's if you look at the quarterly development for the first quarter, you saw that we had a lower EBIT in the first quarter this year compared to last year, and it's just worth noting that, I mean, the first quarter last year was exceptionally good for us. I mean, and we also had a reasonably good first quarter in 2021. But typically for us, it's the first quarter is a low quarter when it comes to profitability because of the seasonality of our business. I would say that the first quarter this year was probably a bit more normal quarter maybe than, and it's worth having that in mind when you compare it with last year. I'll pass on these numbers, and if there's any questions on these, just feel of course free to mail me or call me if you have something. But we have these been through these before. So if I jump to this one and explain our financial targets. I mean, we have 4 financial targets. One being sales growth, where what we say is we want to outperform the market, and we do measure this internally, but we don't have a set percentage externally how this should grow. But we will say that generally we feel we grow at least at the pace of the market and our competition, with the exception right now of the EPDM market, where we feel we are losing market share on selected markets here. Profitability we have expressed as ROCE should not go below 13%, and we are currently just above 13%. So what we see ahead of us is that it might go down below 13% for a quarter or a few quarters, but long term we should be above 13% here. And then the capital structure is that the net interest-bearing debt in relation to EBITDA shall not exceed 3 times at any time during the year. And we are today at roughly 2.0, so we still have some headroom for that one. And looking at the dividend policy, what we say is we should distribute at least 50% of net profit to our shareholders every year, and that we have done every year since the IPO, and this year we distributed 7 kronor per share. So that's sort of a direct return on share at about 5% right now. So yeah, having said that, maybe I'll stop there, Adrian, and open up for questions.
Absolutely. Thank you for your presentation. I'll go straight ahead with a few questions. First of all, you mentioned the weaker business cycle we're in at the moment for construction. Can you talk a bit about the direct impact on you? What type of volume growth for Nordic waterproofing we can expect for the current year?
Yeah, I think if we look at the top line, I mean, it consists of a couple of different factors, of course, where price being one, and the latest time when we increased prices significantly was a year ago in the second quarter last year. So when we've been a couple of quarters now had 13-14% in price impact, and we expect that to go down, and for the full year this year be pretty close to 0. Volume development we would expect for this year to underlying volume development, then clean from price effect, would be somewhere 10% down, possibly in the range 10-15%. I think is a little bit different depending on different markets, but somewhere in that range I would expect it to be.
And is it possible for you to have sort of visibility beyond the current year on volumes? Do you have any take on when we should expect the construction market to start normalizing?
No, I mean, there are, say, institutes doing this forecast when it's turning, and I think it depends a little bit on market. Some will say that it will still be negative next year, but not as negative as this year, but whereas some will maybe be a little bit worse next year than it is this year. But I think both 23 and 24 is typically somewhat negative, both of them. I think 24, you will start to see the things going up, and then 25 is a long time away, but I would expect that to be see a positive development in 25 if I dare to make a forecast.
Okay. And on the pricing component, obviously you were quite quick to raise prices when oil prices came up, with bitumen being an oil-based product. Now that oil has come down, are you going to be forced to lower prices at this point, or are you enjoying some higher gross margins at the moment?
I think we're quite, I mean, flexible listening to the market demand, but we have historically decreased prices, but we try to avoid to do that, obviously. So we rather work. I mean, if our customers need some support, we'll rather work with project discounts rather than lowering the prices. But it cannot be excluded that on certain markets we're going to decrease even price lists actually. But rather work with project-specific discounts when needed.
Okay. And in a typical cycle, when prices do turn down, how long can you sort of hold up your raised prices?
Sorry, how am I looking?
When oil prices do come down and customers start coming to you and asking for lower prices, how?
Say somewhere 3 to 6 months, but we can keep that up. But it also takes about 3 months for a change in cost and input material to pass our supply chain and come out to the customer, I would say.
Okay.
It's
and on the M&A agenda as well, you talked a bit about being a bit more selective with your acquisitions due to the higher interest rates. Where are the sellers at the moment? I mean, multiples on the stock market have come down. What's it like on the private markets? Are the sellers accepting lower multiples?
I think it differs, but in our view so far has been that the expectations are still a little bit too high, but we've always been quite careful on what we are willing to pay for acquisitions and what multiples we are willing to pay, and typically rather try to find something maybe where we buy 70% of the company and then we have an earn out or an option. So if we have a continued good development, we actually pay, assuming we keep the seller as management in the company. We then pay them for delivering a good result, let's say the first 2 to 3 years in the group. It's a bit more safe way to do it, and hopefully it makes the seller happy. He's getting well paid, and we get a company that has a good development, and it's so far proven to be a good model, I would say.
And looking a bit more strategically, are there any specific product groups or any specific regions where you are targeting growth through acquisitions at the moment?
I mean, one is of course to integrate downstream, where if there are areas where we can say find roofers to integrate, so we secure our products way to the market, and it actually goes both for our bitumen-based waterproofing membranes as well as the EPDM. Then I would say if we can expand into the green environment, so the green roofs, house parks, etc., urban environments in different ways. That's quite high on our agenda to see how we can do that. That's but it's call it opportunistic, but we don't exclude anything right now. I mean, another obvious area is of course if we can do something in say solar panel installation. We increased our shareholding in a Finnish company, Playgreen, from 33 to 64% some months ago, and if we can do that on more of our markets, it's something we look into.
Okay. One final question from my end, and then we're running out of time. Again, back to the sort of business cycle situation at the moment. In a weaker cycle, what are the things that you can do to sort of mitigate the worsening market conditions? And can you talk a bit about how historically your bottom of cycle margins have been like?
Yeah, it's no, but I mean, one thing, of course, is we try to adapt our costume. Looking at the organization, see where can we save cost. Are there synergies between different parts of the organization? And typically, if somebody leaves, can we sort of reorganize or do without that function for the time being until we see something different? So if you look at bottom line, I think our EBIT will. We saw EBITDA before was somewhere 11 to 15, and the EBIT will be somewhere in the range, say 7 to 11 or something like that, in the same range. So we still have quite a good headroom to the red numbers bottom line, I would say, even in a weak business cycle.
Okay. And with that being said, I'd like to thank you once again for your presentation and for answering my questions.
Okay.
I'll just leave it up to you if you have some final remarks before we round off here.
No, I think you covered it as well. So, okay. Thank you very much.
Perfect. Thank you.
Okay.
Hello, everybody. Welcome back to ABG Investor Days. My name is Adrian Galani, and I'm an equity research analyst here at ABG. And up next, we have a presentation of OrganoClick. And with me today, we have CEO at OrganoClick, Morten Hellberg. He will talk for roughly 20 minutes about the company, and then we will have time for some Q&A after that. So, Morten, please go ahead with your presentation.
Thank you very much, Adrian, for the introduction. As mentioned, my name is Morten Hellberg. I'm the CEO and one of the co-founders of OrganoClick. 17 years ago, I was involved in founding the company together with two Swedish professors, one professor in organic chemistry and one professor in cellulose chemistry. And they already back in the mid-90s started to realize that this will become a problem. Synthetic chemicals and plastics that does not degrade, that are now accumulating in our environment. And as you probably are aware of, today around 11 million tons of plastics are released into the oceans annually and are just gathered there. So what they started to look at was to how can you use natural chemistries in order to replace these synthetic chemistries and this type of synthetic plastics. And this is a field of research which is called biomimicry. That is, you're looking at natural chemical processes or natural processes and try to mimic that in industrial environment. And our science, it already started back in the mid-90s. What our scientific co-founders have looked into is what is the chemistry behind a tree becoming so strong, or why does some leaves become water repellent, or why does some trees burn less good than other trees? What are the chemistries and molecules doing this in reality? Based on this, they developed a technology which we call modification of cellulosic fibers. That is, we can click on organic molecule to the cellulose fiber, which is the core component in wood, paper, non-woven textiles, which I will talk a little bit more about, and textiles made of natural fibers. Today we have a product portfolio that is based on this core technology, where you can create water resistance to these materials, grease resistance, mechanical strength, fire protection, and rot protection. So we have developed a number of technologies based on this core technology for modification of cellulose. Something we are today very proud of is that we were very early in working with green chemistries. And this have recently been really let's say, knowledge to, how that you can use this type of green chemistries. So the organo in our name is based on organocatalysis. And organocatalysis is a chemistry where you use organic molecules to create different chemical reactions. This was awarded the Nobel Prize in 2021. So we were, of course, very happy that the catalysis that we've been working on since 2006 now actually got this type of recognition. Which is, in terms of science, the highest recognition that you can get. The click in our name stands for click chemistry, and click chemistry is also a type of chemistry where you click on molecules or click together two molecules, and we are using organocatalysis to click molecules together. And we were a bit surprised, but of course also very happy when the click chemistry was awarded the Nobel Prize in 2022. So both the click and the organo in our name has now been awarded the Nobel Prize due to that they can replace synthetic chemistries with different green chemistries. And we were actually one of the companies that were first in the world to start working with this type of chemistries to commercialize develop different type of commercial products. Today, with the OrganoClick technology, we have developed a number of products, and we're working today in 3 different product areas. We have our bio-based binders, which are linking cellulose fibers together to create stronger materials, and they are replacing plastic binders in non-woven materials and textiles, where you are. And one of the applications I have with me here today, it's a napkin, premium napkin, that is a type of non-woven material, and this traditionally had around 10 to 15% plastic polymers in it. Now, with the aid of our products, it's completely plastic-free and 100% bio-based and biodegradable. Textile waterproofing is another area which we are working with. There we are replacing bioaccumulative and toxic PFAS or fluorocarbons, which is now banned in the European Union on a broad basis and also in the US. And here we are using natural fatty acids that we are clicking onto the textiles in order to create these water repellents. Third area is the wood protection technology that we have developed, where we are replacing biocides and heavy metals with natural minerals, which we are clicking to the fibers in order to create a physical barrier to the rot fungus instead of a toxin. Today we are an industrial company. We are located up in northern Täby, where we have our factory. Today we have a capacity of producing 20,000 tons per year. We doubled the capacity last year with investment in additional production lines. Last year we had revenues of 150 million, and as part of our sustainability work, I mean, we are producing bio-based and biodegradable products, but we also want to work in a sustainable way. And we have been working for quite some years in order to reduce our carbon footprint. And last year we were proud that we can say that we got certified as a climate neutral company. One of the things that we started to work on last year, we've been, let's say for the last 10 years, we've been exploring a lot of different areas where our technology can fit into. And it had actually gone into quite a lot of areas. And we started to realize that we need to focus our business. We need to slim down and streamline our business in order to have more focus and get quicker to profitability. So we started off that work last year. And I mean, one of the key aspects in our new strategy that we now have developed is that we want to really work with profitable growth. This is a key aspect. We've been historically we've been only focusing on growth, but now we're really working on focusing on profitable growth. And how we do that? Well, the streamlining process is one really important aspect of that. We are really now focusing on these 3 different product areas that I showed you, but also focusing in terms of operations on less areas. Historically, we've been producing some materials and some chemistries. Now we are streamlining us down to only working with the green chemical production. This is, for us, a very important step in order to get more cost effective. So we are outlicensing some of the production that we have done historically, the biocomposite production, where we have produced materials that we have started to outlicense, and we now have license partners that is reducing our cost quite a lot. And we are also working on out-licensing the production of the organo wood, but we will focus on the wood treatment chemicals instead. And finally, we are, of course, looking at growth initiatives within our different selected areas, and these are the areas that I showed you: our bio-based binders, our biocide-free wood preservatives, and the organo textile impregnation products. And here we have a lot of synergies in our own operations, in our production. We're using the same type of equipment to produce these different products, and also in the R&D, it's a lot of synergies between them. We can happily say that we already now have started to see that this have turned into better performance. As Q1 this year was the first ever where we had a positive EBIT for the whole OrganoClick group. This was a major milestone for us, I have to say, and also coming from last year where we had quite big losses in our result. So if we look into what happened during Q1 this year, we had very strong sales of our binders, and here I can say that this product, napkins, is one of the major products that we are supplying to right now. So we have big customers that are producing napkins, which are now replacing their plastic binders with our bio-based binders. Even though we're growing really a lot in this segment, but we have a very weak market also for our consumer and building-related products. So this is something that, as you probably know, consumer products are in quite difficult markets right now, and also building products are on difficult markets. So here we have quite weak markets. But for our bio-based binders, we had a big interest, and one of the new customers that we received during the quarter was the Finnish Sharpcell, which is a non-woven producer of napkins, but also for hygiene sectors. They are supplying the big hygiene companies in the world, and also wet wipes is another area which they are working on. And we also launched a new generation of our wood protection technology. Looking into the figures, we had a sales growth of 33% in the quarter. Gross margins was approximately the same, but we reduced our cost and our OpEx, and this was due to the streamlining that we did during the autumn last year, which all in all improved our EBIT quite a lot, from minus 4.2 last year to a little bit small plus this year. And this is of course a very important milestone for us. However, I mean, due to the heavy growth that we increased the trade receivables quite a lot, and that was where we bound capital into that, and that is why the cash flow became negative. But this is something that is coming back in the next quarters. And this is, we're selling to big industrial companies. They have their credit times with us, and when you grow 33%, then you bind a lot of money in that. But here we mitigate that as we now have a factoring facility, so it's been we have been able to mitigate that with credit lines. If you look at the sales per quarter now during the last 5 years, you can see that we have had a steady growth. However, the Q1 this year was the absolutely best quarter that we've ever had. 33% increase compared with Q1 in 2022. If you look at the EBIT per quarter, you can see that it was a quite big change between Q4 last year and Q1 this year. But also, if you look historically, it's our absolutely best Q1 ever. Q2 is, due to seasonal aspects, normally the strongest quarter for us. That is why we also had positive EBIT there before the pandemic started. But then when the pandemic started, we got quite a lot of troubles with cost-related issues of raw material cost. But now we are back on track, really, and that is really good to see. If you look at our different business units, as we mentioned, we have these 3 different business units. The non-woven segment have been what we've been lived in for many years, and now we can finally see that this is actually happening. The big sales increase there. Right now, the non-woven segment, the binders for non-wovens are the biggest segment, and that has happened just in a few quarters, actually. If you go into the new agreements that we have had, that we have made during this year, Sharpcell first. This is a non-woven producer producing materials for napkins or for wet wipes and for hygiene products. They launched a plastic-free non-woven with our binders on a fair in the end of March. They started now commercial production in Q2, so that has not been part of the Q1 growth, but this is starting later on. They are family-owned business, really good to work with, and medium-sized company, so not super big, but reasonably big. Then in April, we went into another agreement, and this is probably the best customer that we can have in our business. American Glatfelter, listed at Dow Jones in New York. They are one of the world's largest non-woven producers, supplying all the big giants in the hygiene industry. And you know the three big ones in that is Procter & Gamble, Kimberly-Clark, and Essity. They have factories both in Europe and in the US, and they now launched a home compostable air-laid non-woven product at the fair in Geneva in April. And they will start now commercialization during Q2. And for us, this was our dream customer, I can say. So a really, really good customer that we now have started to work with. And also that we went out with them publicly to announce that this collaboration started. So we, as I mentioned, they launched the product at the world's largest non-woven fair in Geneva, where we also took part. Here also 2 other customers pre-showed non-woven products with our binders for soon to be launched for the hygiene sector. So there were 4 different products that was shown here. 2 were launched and 2 other was shown. And for us, we also launched something that is very important in this business. It's a regulatory requirement in many products, and it is that the non-woven material becomes certified as home compostable. So this is something that is making us stand out a lot in this business environment. There does not exist any other binder that is certified as home compostable. So this is very important for our customer, and I think this will drive our business even further. In end of April, we also announced another collaboration. This is for our Organotex products. Bever is the biggest outdoor retailer in the Netherlands. They have around 75% of the Dutch outdoor market, and they launched Organotex together with us in all their stores. So we believe this will be one of our biggest customers within these segments now in 2023 and in 2024. And we also, as I mentioned, launched a new wood protection technology, Organowood Nova, which we have been working on developing since 2015. And why this is, for us, a very important technology is that it's easier to produce, easier to get an even quality on this product. And finally, but not least, you're using exactly the same equipment as they do in the pressure impregnation technology today. So this is a very easy product to implement in other wood impregnation companies' production facility. And previously, we've had a technology where you needed to have a special drying oven and some special equipment in the process in order to get a good quality. But now you can use exactly the same equipment as they do today. And this lowers the limit for other wood impregnation companies to start using this product. If you look into 2023, our main focus is continued development of our non-woven projects. We're focusing on the segments of wet wipes, hygiene products, and tabletop products. Tabletop is when you have wet wipe, when you have napkins like this or table covers. For the Organotex, we're continuing focusing on our international expansion with a big focus on Germany right now, and also Austria and Switzerland, so the DACH region. And of course, the launch of Organowood Nova is another big theme for this year. So with that, and I'm happy to take some questions, Adrian.
Yeah, perfect. Thank you, Morten, for your presentation. I'll go straight ahead with a few questions.
Yep.
First of all, I'd like to start on your new contracts for the bio-based binders. Can you talk a bit about how the ramp-up period for those could look, and perhaps also looking a bit ahead, what the long-term potential of the projects could be?
Yeah, well, I mean, we have not gone out with any figures yet, because it's always challenging to say exactly how fast the ramp-up period will be. That we know from our previous products in 2021, when we signed our first major agreement in non-woven, we thought it would ramp up much quicker than it did. Now it took another year, but I believe this will be quicker because now we know a lot more about non-woven production. Of course, we have a better team that is better in implementing our projects or in our products in new non-woven producers facilities, and there are also, let's say, more urgency, I would say, among our customers to get out with sustainable products now, as they want to get plastic free. This is a big driver for our customers to get rid of the plastics. So I'd say we will see some sales starting off now as they are starting producing here in Q2. But I believe by the end of the year we will have more information about how quick it will go. So. But in particular, Glattfelter can be a very large customer for us. That has a very big potential. They have around 30% of the market in the segment which we are focusing on right now, of the global market, and none of the other non-woven producers that we are working on have more than 3-4% each. So they are really a dominant player in this market. So.
And looking at another one of your growth initiatives, the Organotex, textile impregnation, we are heading into the high season in Q2, and you've signed some new deals. But on the other hand, as you mentioned, we're seeing some weaker consumer demand. How should we think about the Organotex product sales going forward from here?
Yes, you say we have two different parts in this. We have a weaker consumer market in general, but we are on the same hand taking a lot of new customers. So we believe we'll have a good growth for the Organotex in this year. but it will not. Yeah, I mean, let's say very reasonable growth for this, which will be certainly in line with what we see for the group as a whole. So, I mean, Beijer, that deal is for us a major growth driver for Organotics.
And then looking a bit at your exciting new strategy of streamlining your operations. Obviously, the big point there is outsourcing the wood production. Can you talk a bit about the current cost base for the wood production, how it's going to change? How are the figures actually going to change of getting rid of that production?
We have not gone out explicitly with how it will change, Adrian, but we will certainly be less cash intensive when we're talking about our business as a whole. Today we have to tie up quite a lot of capital in the stock for the wood itself, because you need to keep quite a lot of stock in order to sell this type of product. When we work together with the wood treatment companies that are doing that for us, we can really get rid of that effect of binding a lot of capital in the stock. And I think that is one very important part in streamlining this, but also in terms of focusing on our chemical production. So we'll certainly reduce our cost quite a lot with this. But I will not give you any figure today, as we've not gone out with that explicitly.
Yeah, and I understand. And also, perhaps the next question as well, you can't give an exact answer on, but what can you tell us about where you are in the process of this strategy, is streamlining your operations? When can we expect to hear some news on this?
We have ongoing discussions with a number of actors today. So hopefully we can get up with more information during the year, but we have several discussions right now.
Okay. And one final question from my end before we have to wrap up. You have a lot of new sort of exciting opportunities, signing new customers, but at the same time you're sitting on a fairly slim cash position at the moment. Can you just talk about the near term, how you're managing the cash position?
Well, we have, as we said, we have secured quite good check credit lines. So we have this as a buffer today, where we can handle the let's say the running cash flow that we need in order to grow. We also have quite big stock which we want to get down, and so there we have quite a lot of capital that we can release from just getting down the stock today. So this is the strategy going forward there.
Okay. With that being said, we have to round off, and I'd once again like to thank you for your presentation. And I'll leave it up to you if you have any final remarks before we round off.
No, not more than we're very happy that we can actually, for the first time, present the positive EBIT in the first quarter. And that feels very good after been working for a long time to try to achieve that.
Okay. Perfect. Thank you.
Hi, and welcome back. The next company presenting today is Nanexa, a Swedish biotech company developing long-acting injectables. And with us, we have here today the CEO, David Westberg. David, the stage is yours.
Thank you so much. Thank you so much. So, yes, I will present to you an update of Nanexa. And I'm David Westberg, the CEO of Nanexa. And for those of you who don't know me since way back, I've been the CEO of Nanexa since 2015 and have a former experience from Pharmacia, Pharmacy Upjohn, Orexo, and other companies. So Nanexa, yes, we're a company that have a proprietary drug delivery technology based on a process that's called atomic layer deposition, and we are using that technology to build long-acting injectable products, and I will come to that in more detail. And the drug delivery system is what we call PharmaShell. And the environment we're working in or towards is, of course, the pharmaceutical market, worldwide market, and especially the US market and the European market. And normally talk about the 7 big markets, which is US, the 5 biggest in Europe, and Japan. And looking at those markets, we see an aging population, and this picture shows that in numbers. And that's, of course, an aging population demands more treatments, more effective treatments to actually have the possibility to, within a frame of budgets and so on, actually be able to treat all the indications that occur, or all the indications that occur when people get older. And of course, if you have a chronic indication and you need to treat yourself every day, that's cumbersome. Also, if you're young, but even more so if you're older. And then, of course, a long-acting injectable in any kind would help a lot. Being convenient, and by that increasing the compliance of the treatment, and that is of course essential to actually get a treatment. So it's important for the patients, and also for the patient or relatives for the patients that are more or less taking care of them. So that is one part of it. The healthcare system is another part that would benefit a lot from long-acting injectables. Of course, you would need fewer visits to hospitals and so on for treatment, and having a better compliance to treatment gives a better efficacy and so on, so people don't get worse, so to say. Payers are another important player here, and of course the insurance companies in US in particular are interested in having effective treatment, and having a long-acting such would of course benefit the insurance companies as well. And last but not least, the sustainability. Of course, having a fewer injections and so on will not only reduce the risk of mishandling of medications, but also have an environmental positive effect. So this is a picture showing what we're doing. Actually, we're building an extremely thin shell of an inorganic oxide on top of API particles. And that oxide itself has a very low solubility, and that is actually what controls the release of what's inside of it. And normally we work with particles that are in the size of 5 microns, and coating them, each of them actually, with this shell, and then making a suspension out of it that is then later administered subcutaneously or locally at the tissue that needs treatment. And what you then get is an even and nice release of the active substance during a certain time period that we decide already in the beginning, whether it should be a 1-week depot or a 1-month depot or a 3-month depot or so. That is something that we can elaborate with, choosing different composition of the shell material or different thicknesses of the shell material. And doing that, we can get a plasma profile shown in the picture below the particle, where we have a release profile like the blue line there within the therapeutic window of that specific treatment. some of the general advantages of PharmaShell is that we add extremely little material to the API, and we have a very high drug load of maybe 80 to 90% actually. We also have a possibility to control the initial release, which is extremely important if you have long depots. We also have a possibility to actually coat not just small molecules, APIs. We also can coat biologics such as peptides and proteins. And we have some interesting data both on peptides and actually monoclonal antibodies, which is a really growing market. And I will come to one of our projects, the Next 22 project, later on in this presentation. Well, our revenue model. Our main target is actually to take our projects that we fund ourselves to a clinical proof of concept, and after that out-license to a bigger company that will take it through the last clinical study and registration and then marketing. However, we have the door open for actually taking a product ourselves to the market if, and that is a big if that shows to be cash positive, so to say. It costs a lot to launch a product in the US, but it has a big advantage after, of course, it has been launched. But that's something that we will take into consideration later on in the project developments. So that is our own projects. Then we, of course, also work with partner projects where the big companies of the world come to us with ideas of product long-acting injectables with their APIs. And there we have another business model to out-license the technology as such to such companies. And there we have one example of that is the collaboration we have with Novo Nordisk that I will come to later on. And already on this picture I see. So actually we're very happy about this collaboration. Novo Nordisk is, as you know, the third largest pharma company in the world actually, and it is growing extremely fast, very much in the field of diabetes. And the GLP-1 analogs that we're working with in our Next 22 project is one product that Novo Nordisk actually has that has gone and will go off patent very soon. And that's liraglutide. In the collaboration with Novo Nordisk, we work with another of their compounds that they don't want us to reveal exactly what that is, but it is one of their major products, one can say. And they wanted to have an exclusivity for doing an evaluation of our technology, so they have that for a certain amount of time or a certain amount of activities that should be performed in the preclinical phase, I should say. And for that, they paid $4 million for that exclusivity. They added on about $500,000 for the actual work that we're doing. And in the same run, they actually also invested in Nanexa with $2 million. So they are actually now the largest shareholder of Nanexa. And they have also promised to, if we want to raise more money during this year, they will take their pro rata part of such an funding if that will be needed. So we're very happy about this project, and the project runs really smoothly, I should say. And it's a joy actually to work together with people that are so good at what they're doing, as they are in Novo Nordisk. So the other two projects that we have is Next 20 and Next 18, both of them in hematological oncology. Next 20 for long-acting lenalidomide. Lenalidomide. And Next 18, a long-acting azacitidine. And I will come to those later. But clearly, these three projects, and with a main focus maybe on the Next 22, we have well over $1 billion in sales when these are launched, all of them. And I could say for the Next 22 itself, it will most probably be much more than $1 billion if that is launched according to what we say now. But looking at a little bit about next 22 and what we want to achieve there, we know that there is the adherence to treatment in the type 2 diabetes among the type 2 diabetes patients is very low, less than 50% actually. So coming with a convenient solution or convenient product where they just have to administer the product once monthly will be a very big step towards actually increasing the adherence and of course increasing the convenience for all the patients. And that is something also that Novo Nordisk and other very big pharma companies that are working in this field have identified clearly. So maybe I shouldn't say so much more about that right now. More than that, the market is of course huge. There's a big need. I already said so. And the market will grow to $90 billion for type 2 diabetes in 2029. $90 billion, that's quite a high number. And the GLP-1 part of those 90 is about a third of that. So that's a substantial amount of money into this market. And we believe that next 22 will be able to address quite a big portion of that than $30 billion market. This is another picture showing exactly what I just mentioned. There are about 50 million patients today diagnosed with this illness. $50 billion market for the type 2 diabetes and $15 billion for the GLP-1 this year, and it's growing about 10% each year. Looking then at our project, this next 22 project that we run ourselves, we have, and I press released that earlier this year, we have already started the preclinical evaluation in animals. So we have tested our first formulation of NEXT22 with PharmaShell, and in that study we saw that we had a 28-day plasma profile of liraglutide, which is exactly what we wanted to show in this study. So that's really encouraging going forward. And what I can say is that we are now into our second animal study with some new formulations where we have tweaked the shell composition a bit just to get it more tuned into the exact TPP that we're aiming for, and we're aiming for a 1-month depot. And with as low burst as possible, so that's important, and we have the means of doing that. One should also mention that we have we are also in the preparation of the clinical trial and actually have close contact with a CRO in Germany where we're gonna engage for that study most probably. These results that we have in the NEXT22 project, I should also mention, is very important for the Novo Nordisk collaboration. Their compound is quite similar to what we're working with in this project. So whatever we learn from the tests we're doing in this project will be applicable also in the Novo Nordisk case. So that is good to know. I think it's an important field for us. The next 20 is the lenalidomide treatment or product for multiple myeloma. And actually here we are also looking at adherence to treatment and increase that or improve that, I should say. Also here in this severe illness, there is actually about 30 to 40% of the patients not keeping or adhering to the treatment as they should. So they don't take the capsules that they should every day. So what we're aiming at here is also one monthly depot of lenalidomide. And in this project, you know, we have a clinical study ongoing. It is going well, this study, and we anticipate to have the last patients completed this first half in June, I should say, actually. So the results will be a little bit later, I think. But in June we will have the actual study completed. Sorry, I just need to put this on. So this is also a very important project for us. I should mention in all our projects we have advisory boards with key opinion leaders from all over the world, I should say, and they are really key opinion leaders, I should mention, and that's really good. For us being a very small company, this is important. And one thing that I need to mention regarding the Next 20 is that we participated in the ASH conference last year, where we got in contact with a patient group that's called International Myeloma Foundation. And they actually, when hearing what we try to do with this lenalidomide project, they invited us to their yearly meeting in Switzerland, I should say, together with, you see what other companies are there. So it was, of course, a very good possibility for us to start discussions about our project and the potential upside with a once monthly injection. Next 18 is an improvement of the azacitidine product that's called Vidasa, where today the patients needs to come in and take an administration or a syringe 7 days in a week, and then they have a resting period for 3 weeks and then another treatment week. We want to exchange those 7 with just 1 injection the first day. And we are also in this, not only a convenience part in this project, there's also actually a possibility that we will get better efficacy having a long-acting release rather than the spikes that the 7 injections cause. So this is something that we're looking into right now, and we're in contact with several labs and so on that will so that we are able to actually look at this possibility in preclinical studies. To help us with everything, to be able to perform clinical studies and so on, and to upscale, we have built a pilot facility in Uppsala, a state-of-art pilot facility for GMP manufacturing. This facility is about 300 square meters. We have a possibility here to introduce manufacturing tools that are developed by Applied Materials, which Applied Materials is a huge company, very much working in the semiconductor industry, but they are world's largest company working with the ALD processing. And we have a collaboration with them, and they are about to install their developed tools into our facility here, and that's very good. Patents is, of course, something that is extremely important for a company like ours. And this picture just shows that we have a lot of patents. We have patents approved, we have patents pending, patent applications pending. What we're aiming for here is to see to that we have multiple possibilities of out-licensing to several companies for several indications, for several APIs and so on. And we also have a strategy to really see to that the patents that we get are listed in the so-called Orange Book in the US, which protects from, which is a book listing all the patents that are for marketed products, so to say. The team that works in Nanexa are extremely experienced, I should say, for a company of this size. We have multiple persons that have been in the pharma industry, in big pharma and smaller pharma for plus 25 or plus 30 years. Both in the clinical development, in development market analysis, BD and so on, regulatory, not to mention the least. So it's a team that knows how to take products from ID to the market. And we have done that several times, most of us. Also, the board of directors I think is interesting to learn that we have Göran Nando as the chairman of the board, and he was of course the chairman of Novo Nordisk for I think 8 years. So he knows the diabetes market quite well, I should say, and the GLP-1s and extremely well, I should say. And we have other persons in the board of directors that are very, very experienced in pharma development as well. A summary of this: we have a unique technology that is directed towards solving a lot of medical needs out there. We have huge market potential. The Novo Nordisk agreement is something that we really are looking forward to, and this is the thank you picture. And I see that you are coming here to ask me some questions, I think.
Exactly. Thank you, David, for the presentation. Very nice. Now we have a few minutes for some questions. I think that the first one that people want to hear is about your collaboration, of course, with Novo Nordisk. I mean, it was a really good way of finishing 2022.
Yeah.
And now have passed like 5 months since then. And I was wondering if you could give us some color on how is this collaboration working in the day-to-day? How good is your communication with Novo? I mean, how happy you are and how happy they are?
Well, I think we are both very happy. We are extremely happy about working with this very skilled team, I should say. And they have set up a complete project team at Novo Nordisk with all the different skills that is needed in a real drug product development project. So we have the best of the best, I should say, to work with. So that is good. And we have... if you say on a day-to-day basis, we have maybe not weekly meetings with them, but bi-weekly meetings. We have updates on, they have transferred their analytical methods to us and also material, of course, and we have started to coat their material. And we're aiming for getting them to start their preclinical studies a little bit later this year, and that will be very exciting. In the development agreement, they will do a number of preclinical studies, but it is limited to preclinical studies. And then they have a possibility to take a license on this class of substances for their use.
That's very interesting. It sounds very promising. And a second question, and also connects with this one, is about your next 22 project. I mean, obviously the synergies with Novo are big there. And I was wondering how much interest has Novo showed, or like if you could give us some broad view on that, on this project, and how, I mean, is there any chance that Novo could hypothetically take over this project and push the development forward at some point?
Firstly, I could say when it comes to the development phase that we are in right now, the results, like I mentioned, the results that we get in the next 22 project are very important also for the Novo project. The shell material, the shell composition that we see works for the next 22 would most probably also work for their product. Mm-hmm. And so there we get sort of a sort of kickstart sort of for their development. If they would be interested in taking on the next 22 project, potentially yes, I think they are, and they have a possibility to take that as well. We also during this evaluation agreement have possibilities to take on discussions with other companies for that specific project. But clearly there is of course an advantage to work with Novo in both.
Great. Thank you very much. And next question is on the that I could make is regarding your other projects that is not 18, 20, and 22. During the last 2 years, you have signed several evaluation agreements with external companies, undisclosed so far. I was wondering if you could give us some color there on how this is advancing. Is it something that we should know for the short term?
They are. There are a handful of them that are advancing. They are advancing in different stages, I should say. We have, I think, all the coatings that we have delivered to these companies in these collaborations has been successful. There are discussions about increasing or deepening collaborations in certain projects, or adding projects within the same company, and so on and so forth. There are a few where there's more of a steady state, where there is a decision process within those companies. But clearly there are a few, at least, that are maybe not of the same size in potential as the Novo project, but clearly some of the projects that we work with could really be a really successful project or product going forward.
Great, thanks. And one last question. I wanted to ask you about your financial situation.
Yeah.
How does your cash position look like now, and for how long do you think you can be financed?
I mean, we were lucky with the Novo deal to get them into being one of our biggest shareholder. So that's very good. And we also got like 60 million Swedish crowns into our bank account in the beginning of this year. So that's good. That's really good. That said, of course, we're spending money as well. And so at some point we would need to fill the cash, of course. But what we have said is that we have cash that will last this year, absolutely, and into the first quarter next year. And the management and the board are looking at different possibilities, of course, but we feel confident that this will have funding also further on.
Great. David, thank you very much for being here with us today and for your nice presentation.
Thank you so much.
Hi everyone and welcome back to ABG's Investors Day. My name is Alexander Wadman and I'm an analyst here at ABG. With us today we have the CEO of StrongPoint, Jakob TV Råback. He will present the company and I will follow up with a couple of questions. With that being said, please go ahead, Jakob.
Thank you so much. And thank you for the opportunity to present StrongPoint, you all. So StrongPoint, we present or provide a set of technology solutions to grocery retailers. We have been in business for many years. So we like to say that we have been in business for more than 35 years, or we have actually been in business for 37 years. We have offices in 8 countries, where Norway and Sweden have been the historic gravity of StrongPoint, but we extended that into the Baltics, the 3 Baltic countries, UK, Ireland, and also Spain. Our revenue from grocery retailers, which is the primary focus of us, is in excess of 80%, or about 84% if you're exact, and we have a turnover last year of 1.4 billion Norwegian crowns. And we have 500 people all across these countries that we represent. And for us, it's very important to get across that we are not only selling solutions, but we're also doing the installation, the service, and the support, and the aftermarket. And part of the value proposition of StrongPoint, if you want, is that we actually can provide it all from sales all the way to the next sales, if you want. If you then move to the next page, I wanted also to talk a bit about our market before getting more concrete about the solutions that StrongPoint offers. And I think in today's context, this is more important than ever. So number one is that our customers are the grocery retailers, and with that high level of revenue stemming from grocery retailers, we feel relatively secure and safe, both in terms of getting payments for the solutions and products we sell, but also from the stable demand from these resilient customers. The grocery retail market as such is what you call a non-cyclical market. Well, sure, there is always going to be the move between eating in and eating out. But if anything, in hard days where household income is being put at the test, that provides more revenue and more activity in the grocery store. And lastly, we are in 8 countries and more if you count the partner countries that we are in. An important part of the StrongPoint story is that we are stemming, or we're having a heritage from Scandinavia, leading on efficiency. And whereas we often maybe forget about it or don't think about it, the high or relatively high labor costs, also for low-cost labor in Norway, in Sweden, etc., is leading us to efficiencies that is needed from the customer and market side, that is making our solutions some of the best there is in the world. And that is the StrongPoint story, really, which I'll talk more about in a second. If you're looking at grocery retailers, I mean, sure, they're under constant pressure. And I'm sure you've heard and read much about the 3 trends that I wanted to just touch upon. One being competition with inflation, and in particular, food inflation increasing. That is something that's been putting pressure on traditional grocery retailers in the sense of getting more demand for private label, getting more demand from discounters. And not least also being competitive on price and handling all the price changes that there are. Secondly, there's still a very hard environment to recruit and not least retain staff. And lastly, in e-commerce, it's accessible yet expensive for many, but it's unprofitable for many. The lock to e-commerce profitability has been a conundrum for many companies out there. And we know for sure that grocers need to take a number of actions to withstand these pressures. But what we and I feel very confident about is that technology will be a vital and integral part of the solution to these challenges. So if you don't think about, if these are the pressure and trends and that the grocery retailers are experiencing, let me try to make the solutions that StrongPoint offer more concrete for you all, in case you don't know StrongPoint that well. So in terms of the solutions we offer in store, to start there, I'll do the e-commerce in a second, but our in-store solutions, they are a combination of proprietary solutions to StrongPoint and also some world-class third-party solutions. So if I start from top here, electronic shelf labels, well, we just talked about how inflation is driving a lot of price changes, how it's driving the competitiveness in the space. And whereas we have in Norway and in Sweden, to a large extent, been exposed to electronic shelf labels and electronic shelf labels from Pricer that StrongPoint represent. This is not the case in most of Europe or the world. But electronic shelf labels is absolutely the way to reduce labor usage in store when price changes are as frequent as we see now. We talked in the trend about shortages of staff. Well, surely self-checkout solutions is part of the answer to ensuring that grocers can withstand that pressure as well. And I will be very quick in saying our self-checkout solution has been developed, both the hardware and the software, from our Baltic origins. And that solution, or those solutions, are being moved now into Norway and Sweden. So I like to say that if you go to any Swedish or Norwegian self-checkout and you are still been hassling with punching in which bananas you have put on the scale, the StrongPoint solution, offering a integral or integrated item recognition of the items on the scale, we automatically detect bananas, making fraud more difficult for the consumer, hence also improving the shrinkage in the store, but not least also ensuring that the customer journey is a lot more smooth. I will not go through all these solutions, but you will have seen a number of these solutions in grocery stores in Norway and Sweden. Cash management and CashGuard is one of those, and including Vensafe, where we have our own proprietary developed solution to contain and secure high value items from theft, which again is high on the agenda of grocery retailers today. I also wanted to touch upon the e-commerce opportunities arising from the solutions that we offer. So if you go to the next page, and we similarly take the roof off the grocery store, you will see that we first and foremost have a order picking solution. A order picking solution that can be used in store as well as in dark stores. And this is the preeminent solution being used in Sweden today. So that said, what we realized very quickly is that the solution that we have offered and have developed have had to always keep in mind the relatively high labor costs of what's supposed to be low-cost labor. That has meant that we had to develop something that's truly efficient, and the benchmark picking efficiency per hour that we have been operating with customers across countries is 240 items. That is 2 times, if not 3 times higher than the benchmark seen out there. So we are still very prosperous about getting our solution out to more customers in Europe. Should also be said that in addition to in-store picking and dark store picking, we have gone into a partnership with a Norwegian, if you can go back one please, with a Norwegian giant AutoStore. So AutoStore, the Second largest IPO done in Norway after Statoil, have done a partnership with StrongPoint, where StrongPoint has been selected the only grocery-specific AutoStore distributor. And we have earlier this year concluded on one project, our first project, and we're still working on the second project, which is a world news, namely having a 3 temperature zoned AutoStore. So ambient, chill and frozen, which obviously is very important when you're dealing with grocers. We have all the set of last mile solutions that is in the market. We are the leading when it comes to grocery lockers, whether stationary and mobile. You will have seen this across Sweden. We offer home delivery services predominantly through Gordon Delivery, a partnership we have there. We have in-store pickup and also drive-through solutions. So the point is that if you're a grocer and whether you have solutions needed in-store or in e-commerce, StrongPoint has the entire portfolio. Now you can move to the next page, because I just really want to reiterate again that what we have developed in Norway and Sweden and the relationship we have with grocers, with ICA, with Axfood, with Coop Bergendahls, Norgesgruppen, Rema 1000, and also Coop in Norway, basically serving all the major grocery retailers and having exposure with all the solutions that you just have seen on the last few pages. Our ambition for the next few years is to export these highly efficient solutions to other parts of Europe. That is, in essence, what you should believe about in the StrongPoint story. We see that the solutions we offer on e-commerce is something that's very valuable for grocers that have ventured into e-commerce but still not making it profitable, as is our experience, for instance, in electronic shelf label, where there's a large virgin territory both in UK, Ireland, and Spain. And if you go on the next page, I really also want to hone in on the UK and Ireland. We went into the UK and Ireland last year through the acquisition of a very esteemed, very proud company called Airlink Group. Airlink Group have customers like Tesco, Asda, Sainsbury, and more. Clearly the top grocery retailers, not just in the UK, but highly respected in the entire Europe, if not the world. And a lot of the challenges that we are seeing taking place in the UK and Irish market are some of the challenges that have already been overcome by Scandinavian retailers. So we believe wholeheartedly in the opportunities to get electronic shelf labels with Pricer out in the market, to get our VenSafe out there to ensure that tobacco and other kinds of high value items products are protected, to get our best-in-class order picking solution and click and collect lockers out in the market, and not least also getting some of the AutoStore solutions up and running also in these markets. So I just really wanted to highlight that the story and the experience we have from Scandinavia is something we both can and will be exporting to the larger European markets. If we then go to the next page and we talk about, well, really what are the white space opportunities for a company like StrongPoint? You can divide these in two in essence. One is that in our mature markets like Norway, Sweden, and the 3 Baltic countries, where we have a 100% penetration with grocery retailers, we're far from having 100% penetration with our solutions. There's still lots of stores in Norway without VenSafe. We haven't even penetrated the market yet with our award-winning self-checkout solution, and e-commerce is still in its infancy in Norway, as an example. And same goes for Sweden and the Baltics. So lots of additional solution penetration opportunity in those markets. If you look at the UK and Ireland market and the Spanish market, we are far from 100% grocery chain coverage. So that is a obvious a white space. We want to develop these organizations into serving more grocery retailers in these new markets. And with that also follows the solution penetration is relatively low. We talked about the UK, but similarly we have in Spain. And whereas I've said a number of times that when you in Norway and Sweden go on vacation to Italy, Spain, and other Mediterranean countries, it to some extent feels like going into a time capsule, moving back in time. Because the solutions we take for granted in Norway, Sweden, is far from being something you can take for granted in a country like Spain. And so why am I saying this? Well, something like cash management, which is not so, again, use the word sexy, not as sexy in Norway and Sweden. I mean, it's clearly on decline, single digit transaction being handled with cash. But in a country like Spain, you still have 55 to 60% of transaction being handled with cash. At least in Norway, you need to go back to the 1990s to find those numbers. And so the point being, cash management will live on for many, many years in Spain, and there's lots of opportunities to be captured also in that market. If we go to the next page, in 2020, we laid out our financial and strategic ambitions for 2025. Firstly, we said we will become a pure grocery technology company. We are that today. We divested non-core assets in the past, and we used parts of the proceeds to pay for the acquisition of Airlink Group. We said financially that we would have a revenue of 2.5 billion Norwegian kroner and an EBITDA of 13 to 15%. And the next two pages, I will show you or put in perspective historically what we've done on revenue and EBITDA, and then how we view this going forward. So for the next page, look at what's been the development in our revenue of the past few years since we announced the 2025 revenue ambition. And so if you start from what was the retail technology division of StrongPoint in 2019, we were hitting some 800 million Norwegian kroner. And as I said, we divested successfully. So 2 business units, we have converted that, if you want, into a UK business. So up including 2022, we have been looking or are looking at a CAGR of 22% in terms of revenue. So going forward to 2025, we need to maintain that same level of revenue growth to get to the 2.5 billion. And we do believe that that's absolutely possible with organic growth and with some selected M&A activity. I should say we are very, very careful about what kind of acquisitions we do. We are in the business of doing good acquisitions, and the acquisition of ALS shows exactly that, with a very, very value-creating acquisition for the shareholders of StrongPoint. In terms of profitability, if you go to the next page, let's start on the left-hand side of this slide. So I showed you all the in-store solutions that StrongPoint offers. And historically and over the quarters, including Q1 2023, we have been achieving a 10 to 11% EBITDA on the in-store solutions that StrongPoint offers. That is including all corporate costs associated with that. And so, well, if that is giving us 10 to 11%, why are we then, as of last year, only achieving 5.5%? And there are 2 reasons for that. One has been and is the e-commerce investments that we are doing. We have been investing in people, in development of solutions, in trainings of AutoStore facilities. That has been dragging our EBITDA historically. We have also had a bit of a turnaround in the Spanish organization last year. And I promised to the market at the beginning of 2022 that we would be achieving a break-even in Spain at the end of the year. We did that. Not only did we break even, but we also even had a small profit in 2022 Q4 in Spain. But still, for the year as a whole, it was dragging us. That led us to 5.5%. So how are we now going to more than double that margin to get to the 13 to 15% EBITDA? And there are three things we are focusing on. Number one, maintaining and even improving the in-store solution contributions. We are constantly working with our suppliers and not least our customers to ensure that we maintain the 10 to 11% and beyond profitability from in-store solutions. We're working very hard to ensure that e-commerce investments are paying off and becoming a contributor in 2025. We have high hopes and beliefs in both our order picking solutions, our grocery lockers, our partnerships with companies like AutoStore to provide automated solutions. So great beliefs in e-commerce and in particular in the British market where the e-commerce penetration is high, still well in excess of 10%, whilst the grocers are still struggling to get a way to profitability. And lastly is Spain and what we've called special projects. And I mentioned to you all how Spain is, or going to Spain in the grocery market is going into a time capsule, going back in time. And one of the reasons for saying that is because of the development of cash. And we are working on, and have been working on a very, very long but significant project that is in the cash management area. It's a project that has been taking us more than a year, actually a year and a half until now. We've been, with our solution, selected as 1 out of 11 suppliers around the world. And I've been in this company's laboratory. Sorry for not being able to disclose the customer yet, but in the laboratory for more than 8 months. And we are now gearing up for a live pilot to be started in Q3. That would have a monumental impact on the way that cash is being handled and will be a very value-creating solution for the grocery retailer at hand, and we believe for StrongPoint. So those will be the things. We need to maintain our profitability in the core products that StrongPoint have been offering for many years, and turning the e-commerce investments and Spanish and special projects investment into proper contributors for EBITDA. On the next page, and before rounding off, I also wanted to just illustrate to you all the next generation of cash card. This is the special project I was referring to. Essentially what it does is containing cash notes, that is, between front office and back office, meaning that a grocer would potentially be able to get credit for the money in the back office in the bank immediately. And more importantly, being able to reduce the number of CIT stops or cash in transit stops from providers of that solution from potentially close to every day to a much lower frequency stop, which will have a fantastic effect on the profitability for the store and the cost levels. So we're very profitable about, very positive about that solution being profitable for our customers and not least for StrongPoint. More on that in Q3 and Q4. So rounding off, before any questions, why should you, as investor, invest in StrongPoint? Well, first and foremost, we are operating in what we believe is a safe market. That is a stable, it's a growing, and it's a profitable market, namely the grocery retail sector. StrongPoint as such, we're not a new kid on the block. We have been around business for 35 years. We have the experience, we have the clout and credibility that's needed with grocery retailers investing in business critical equipment. And we also have then the opportunity to partner with other technologies, as you've heard, AutoStore Pricer, that makes the StrongPoint offering really unique. And we've had a fantastic growth journey to date, and with existing customers and new customers, we are confident that we'll be both growing in the future and also achieving the financial and strategic ambitions we have set forth. But thank you. That's what I had. Any questions?
Yes, thank you, Jacob, for the presentation. And despite that we're running out of little time, I'll still be able to ask some questions. So perhaps you mentioned earlier the acquisition of ALS. Could you perhaps elaborate on the rationale behind the acquisition, and also what has surprised you positively about the deal and the performance?
Absolutely. So first and foremost, the market UK has always been on the list of StrongPoint for maybe for obvious reasons, but it's also been a very good product market fit in our eyes. So what we've been looking at is how can we enter the UK market most efficiently, and we concluded that doing that with a player like Airlink Group that have had Tesco, have had Sainsbury, Asda, these prominent customers on their customer list for many, many years, is the right way to go about. To date, what's been really positive about the acquisition has been the immense work that we have been able to do in the year. I mean, it even caught StrongPoint by surprise that they were able to keep up not just keep up the historic good work, but also increase that. So it went way beyond what we had anticipated last year, Q3, Q4, when we had ALS in our books, and including now in Q1. I think what's really exciting about ALS is that that provides us with the opportunity to get the StrongPoint products in. And as you've heard, to date, we have, quote, only invested in people, getting trainings, getting the partnerships in place, getting the right customer discussions going. And I'm absolutely certain that we will be seeing the harvesting of those investments come into place in the next quarters and years to come.
Yes, thank you. And I believe this will wrap up the Q&A as well as ABG's Investors Day. Thank you, Jacob, for the presentation as well as the Q&A, and thanks everyone for listening. Thank you.